Morning all. How are we doing? Morning Ian. Morning Robert, Virginia, Gregors, Reverend Insanity. Good name. Morning. How are we doing? How is everybody? 30 people. Where is everyone? Does anybody remember how to do this thing? Because I've completely forgotten what all this stuff does. How are we doing? Morning Christian. Morning Mumo. Happy New Year. All to you. Yeah, that was ages ago. That was yesterday, wasn't it? Happy Christmas and all that. How's everybody doing? Right. Sorry, just catch up on chat. Morning, Nathy. How are we doing? So, Robo Forex isn't open yet. 10 o'clock this morning. So I haven't got any charts actually yet because the market for Robo Forex opens at 10 o'clock this morning. So they're opening with the DAX. So we'll have a look through all the FX pairs and everything this morning and see what's happened over the Christmas break, because obviously I've had 2 weeks off. So when I get back, first thing I do is just go through all the charts, see where everything is, see what's happened over the Christmas period, which to be honest doesn't look like an awful lot. Yeah, and then obviously have a quick catch up on news and see what's going to happen there. So this year, basically what I've done, I've got 2 different accounts running now in 2 different brokers. Actually, I've got 3 different accounts running in 3 different brokers now. So I'm running Forex on Robo Forex, and I'm going to be trading indices on DOW now. So because I wanted to trade the FTSE, or try to trade the FTSE anyway, which wasn't available on Robo Forex. But looking at the spreads, it's not particularly tight. So I'm going to see how we get on. I'm not sure whether this is because it's first day back or whether this is the normal spread for DOW and X. It's not too bad, but I want to see what happens when the volatility opens. So I'm going to be trading on DOW and X basically for indices now rather than Robo Forex. And basically I've just put money in 2 separate accounts to segregate it. So I've got a US account and I've got a UK account. So this is going to be trading the DAX and the FTSE, and then the afternoon the US account is going to be running the others. So we'll see where we go. But we've got a few minutes to market open. We've got 3 minutes to the open. So news-wise this week, we're coming straight into an FOMC week. It is only FOMC meeting minutes. There's no rate announcements, but so we are on Tuesday, aren't we? There's no news today. It's a bank holiday in Japan and Swiss. And again, tomorrow it's bank holiday in Japan as well. So there's no news at all to worry about today, which is good. So we'll just see where the market opens, see what happens. Basically, it's just completely random where it's going to go today. So we just have to wait and see what happens. We had a lot of Swiss franc movement pre-Christmas, so pre-New Year. So we'll have a look at that as well. So tomorrow's news, we've got PMIs for the US. We've got FOMC tomorrow evening. We've got the unemployment change, which is coming out on Thursday this week. Normally comes out on a Wednesday. And unemployment claims. So that's for the US as well. And then into Friday, it's non-farm payroll. So we've got the unemployment rate coming out for the Canadian and for the US on Friday. So this week's news is all US based. There's no news on anything else that's really... we got German CPI actually, which will be coming out on Thursday. So that might move the euro a little bit. But apart from that, it's all US this week. So nothing but US news, which is good. Nice and easy to start us into the first week of the year. So we'll see where we go at the open. We've got 2 minutes to go. Quickly whizzing through the charts. Obviously, let's put a little line on where I was off. So that's where I stopped trading around about the 14th odd of December. Was it? When was my last live? I can't remember. 14th, yeah. So I stopped on the 14th. Which was back there. So the Swiss franc had an awful lot of movement during the break. But if you look at everything else, as you can see, this is why I don't trade through Christmas. This Aussie New Zealand chart is a prime example of why I don't trade through Christmas. It's just not worth it. It's wiki. It's just all over the place. So it's just, you know, most of the time you get an awful lot of mess. So we've had a bit of movement on the US, but most of the days were very, very up and down. Pounds dropped against the Swissy. Swissy's been on a mission. But we had a little bit of a drop there, but as you can see, it's just all very, very sideways. So quite often the new year will kick off with a bang. So we'll see what happens over the next couple of days. First news catalyst obviously is tomorrow. So there's no news today. So either today we will get a massive rally because a lot of volume's coming in which hasn't been traded over the last few days, or we won't. We'll have to wait and see what happens. A bit of a gap down there as well. Oh, that's nice. Gap me straight into profit. Thank you very much. So yeah, we'll see what happens. So let's have a quick look at the indices. And as I why is that not given a range size? Auto training's turned on. What's going on there? Why is the EA not working? That's a good start to the year, isn't it? Basically just did not trigger anything at all, did it? Oh, there we go. What the hell happened there? Okay, that's some kind of weird delayed reaction going on. Don't know what that was. Anyway, I'm short on the DAX. FTSE's triggered as well. There we go. That took ages to trigger this morning, didn't it? That was about 20 seconds that took for the EA to actually do anything. Weird. This spread's massive in the FTSE, isn't it? Long the FTSE. Not sure I'm that keen on that spread. We'll see what happens. Morning, everybody. I haven't said morning to. Morning, Pot Gaito. Morning, Franco. Welcome back. Morning, Kennelly. Morning, Luke. 1 week off. 1 week. What? 1 week off to start the year? You're taking a week off to start the year? Most people are going back to work today. But nothing wrong with that. Right. Let's just make sure the markets have opened in Robo. Yeah, that's good. Okay, so gap down into profit. Shall I bank some of that? Most violent of opens, is it, this morning? So pre-market range is the 5 minute on the DAX today. Not a lot of volume at the open at all. Looks like the market's going long though. So breaking long on the DAX, on the FTSE. I'm going to get you saying FTSE. I've traded the FTSE for a long time. So looking at where we are, obviously we've had a lot of sideways, as you can see, over the last few days that have been tradable. We've got 2 areas of resistance coming up from the previous day's high and the high of last week. So that is your FTSE upside resistance. Downside is obviously just going to be kind of weekly levels as well. So we've got this little gap that we put in. So just looking for this range at the moment to find out which way the market wants to go. Because obviously we don't know whether we're going to run into a bull market in January or run into a bear market. So hedged on the DAX. So from the upside potential on the DAX, it's last month's high, December high, which is there, which is beyond ADR today. Other than that, we've got a little wick there. Apart from that, it's kind of off we go. So that's 5R, which is 125 ADR today. So we'll see if we can get a break up to that level. We're just approaching the high on the FTSE. That's last month's high as well. So if you look at the FTSE highs, we're coming up into what could potentially be a strong resistance area if the market wants to go bear. So it's basically market opens. It's just going to test where are we going at the moment. We don't know. We've been sitting on low volatility, low volume. Nobody's been interested in any directional bias whatsoever. So we've just been sitting around. So what are we going to do? We're going to start with a bang in January, or are we going to go bear? There's no reason really to go either direction fundamentally. It's just a case of what is the market going to want to do. So we'll wait and see. Looks like it's going along at the moment though. Just coming up towards TP on FTSE. So 1.5 bar on the FTSE. Nice clean break. That was unfortunate. It got shorted on the DAX there. Never mind. Nice push on the DAX. 20 seconds left on this candle. FTSE's playing with my TP. I'm just going to shut that. So close the first TP on the FTSE. That's TP1 hit, but I'm not going to let that come back down. So break even on the second half. Runner is within ADR today. DAX, just so you know, obviously on Robo Forex, they did not open the market on Robo Forex until 7 a.m. UK time. In the Darwin X, they show pre-market data. So we get all this pre-market data. So gaps are a little bit more tricky to identify in Darwin X, but obviously that is where we closed on the 29th of December, and that's where it opened. So there is actually a gap there, potentially to get filled to the downside as well on the DAX, but okay, FTSE just pulling back. So it'd be nice if we can get a decent propulsion gap and run on this. So to get target 5R on this, bear in mind, well, this goes for Forex as well as the indices. Bear in mind your ADRs are calculated over 10 days. We've had the market being closed for some days. ADR is calculated from chart days. So if there is data on your chart, that's a day. If it's no data, it's not a day. So ADR 10 at the moment is going to be a little bit more contracted than normal price movement, because we've had this period where we've had very light volume, very light movement. We didn't get really any ADRs on the indices. So these ADRs are going to be a little bit tighter than normal. So you just need to be aware that price could easily push beyond ADR this week, because the ADRs are going to be contracted in Forex and in indices. So there's a chance that we're going to obviously do normal market movement, which is above the normal average daily range at the moment. So I'm not really worried about having a target up there at 125 ADR, because that could easily get done today. But that monthly high there is obviously what I'd be interested in, and the target 2R is within there. So that's where I'll be aiming for today, just that normal 125 ADR. That's 5R on the break, basically. So we will see. Looks like we're going to get stopped out in the second half of the FTSE. Okay. So FTSE's nice little profit this morning, hedged on the DAX. So downside on the DAX, it's all over ADR, isn't it? It's a tricky one today. I would probably go just within 125 ADR. So these lows, basically. See if we come back down, and it's basically this area here, which we hit. And then we finally broke that, tested it. So that's what they're testing, this area here, which is holding. So we'll be looking for either a range to form here, or for some kind of bounce and then break through if we're going to go bearish. So downside target on the hedge, going to leave down there just beyond, just inside 125 ADR. Upside obviously is going to be just inside the monthly high. Sorry, that's the wrong chart. That's the FTSE. I'm going to have to get used to it. I've got a new chart layout as well. It's always shouldn't really change the chart layout in January when you're not fully concentrated. But anyway, so yeah, monthly highs up there on the DAX. There we go. So there's your open. Done. If you didn't get that short on DAX, well done. You haven't hit target yet, but you are still long. So we'll see where that one goes. Right. Forex. So this is a new account. Well, no, it's not a new account. It's an account which I've just transferred 50K into, basically. So this is going to be my position trading account moving forward this year. So I've split my funds down into position, into scalping on indices, and I've got another account which has got 30K in, which I'm going to be trading a support and resistance hedge-based strategy, which is kind of a cross between position trading and support resistance, normal stop loss based trading, which is what I used to trade on prop, and hedging. So I've got an EA built, which is to automate those entries and manage the hedges, basically. But it's not fully automated. It's basically an EA that is going to help me squeeze hedges and trade hedges. It's not finished yet, which is why I haven't got that account up and running. It's something I was going to do over Christmas, and I didn't get around to it. So I need to get the account set up on my VPS, but I'm going to trade it on demo first, probably for a month or so. All the back testing I've done is great. But I want to basically forward test it to make sure that the EA hasn't got any problems that I haven't foreseen or seen while I've been doing testing. So I haven't had a chance to get that set up yet. That's something for me to do this week, basically. But I'm splitting down into multiple strategies, basically, which is pretty much what I did last year. But I've just got separate accounts for each now. So I've got a separate account for position, separate account for FTSE and DAX, and a separate account for NASDAQ, S&P, and DOW. So be trading that one this afternoon in the afternoon session. And then obviously the other account I'll roll out as and when I've got it finished. Morning, Robert. Did you run the EA, all the EA since December? Did I run all the EAs since December with start today? What? Doesn't make sense, that question. I started trading when did I start? When did I deposit? 15th, 28th. So 27th I started. So I've done $400 this month so far. No, December, sorry. I did $400 in December. So I started on the 27th, restarted it. Oh, there you go. Look. That's what I've done so far. So yeah, I restarted the EA, the MRA EA on the 27th, which was last Tuesday. No, it wasn't Wednesday. Thursday? I don't know. A few days ago. Anyway. So yeah, basically just back into position trading. I wanted to get some positions on. There was a lot of movement. So I wanted to get some of those Swiss positions on. So yeah. But I'm only trading the EA. I've shut down all those demo accounts that were running all the other strategies that I don't trade. So the H1 hedging, I ran basically last year. I ran the market reverse alerts EA with 4 strategies on the VPS. If you were here, you know anyway. But the H1 hedging strategy did, I don't know, it more than doubled the account, didn't it? Since April. So it was running for roughly 8 to 10 months or something. And I was running H4 M15, and I was running my account, and I was running the ADR reversals account. So I've shut all those down, basically, because the idea was to run those in here so that we could look at all the trades. It didn't work out. We never looked at them, did we? We just had the EA running, and I'd go in every now and again and check it and go, oh, look, it's made a load of money. And that was it. So I've shut those all down just to free up load on the VPS, basically. But so yeah, so I'm not running any of the other strategies. Literally, it's H1 M5. You're going to find, as I always say, you're going to get the same entries. If you're trading ADR reversals, you're going to get very, very similar entries to H1 M5. So I'm not running any other MRA accounts, just this one at the moment, H1M5. Right. Franco, having a good night. But if there wasn't drawdown control, there would be no control. That is true. Yeah. Got drawdown control. Right. So you can see what I've got on at the moment. I've got some yen exposure on. And I've got a US dollar Swiss long, I've got pound US short and a pound Swiss short. So we'll run through basically all the pairs and we'll have a look at basically how everything has panned out over the last couple of weeks. So that's where the last live room was, that red line. Morning, Harold. Excuse me. I've had a hideous cold all over Christmas as well. So I'm still kind of recovering from that. But yeah, so basically we had the latest news come through. Obviously, the last major news that we had was there, which was CPI, wasn't it, for the US? We've had a couple of bits and pieces of news happen over the last 2 weeks, but nothing dramatic. So if we just remind ourselves where we are from a fundamental perspective, we are at what we think are the terminal rates now for all currencies. So Aussie dollar is sitting at 4.35, Canadian at 5, Swiss franc at 175, euro 4.5, pound at 525. Japanese yen is still at zero, negative 0.1. That they have said they are going to change. So this year we are going to get, for the first time in 7 years now, positive interest rates on the yen, which is going to power that yen up. That yen is, you want to be doing nothing but shorting the yen. When this cycle starts, it's not started yet, but so yeah, that's going to be changing. New Zealand dollar at 5.5, US at 5.5 as well. So there's your current interest rates and there's the current inflation figures. So inflation is sitting very high for the Aussies and New Zealanders. Everybody else's inflation is all coming down nicely. So all these numbers are coming down faster than expected. So what that means is interest rates are going to drop faster than expected. And what that means is when those interest rates drop, the currencies will drop. But we've had an 18-month cycle of interest rate rises. We are going to have probably longer than that cycle of interest rate decline. And the speed of that decline will be a lot slower than the speed of its rise. So what's going to be happening over the next 12 months is we are going to see all these interest rates coming down 0.25% at a time. Unlikely it's going to be literally every month we had 0.25%, 0.25%, 0.25%, or 0.5%, didn't we? That's not going to be happening. So the interest rates always come down slower than they go up. And it all will be dependent on the speed of inflation drop. So if inflation drops really, really, really fast, i.e. these numbers are 0.5 and then we get another 0.5, bear in mind the target is 2. You do not want to exceed that 2% target. If we get way below that, apart from the Swiss, ignore the Swiss because they have their economy sorted. No other country in the world has. So yeah, basically that's what we're aiming for. As you can see, the Europeans are at 2.4% with a 0.5% drop. The CPI figure that's coming out for Germany this week is going to be a real telltale as to whether or not that is going to bounce. Now, what we're expecting in Q1 is for the inflation figures that have been coming down to now bounce up a little bit. So nothing comes down in a straight line. It goes like that. Yeah. So we've had a very fast, steep drop on inflation, which means that we're probably going to get a little bit of a bounce in inflation, which means that they won't want to drop those too fast and then it will collapse. If we get that inflation figure doing that rather than that, it's going to scare the crap out of the central banks and they're going to drop these fast and hard, which means you're going to get massive volatility, massive movement in the Forex markets because the market isn't expecting that. So it could be a very, very volatile first quarter. It could be normal. We don't know. Obviously, this is what trading is all about. If we knew what to do, we'd do it. And we'd all be billionaires, but we're not. So basically, that's what's going to be happening this year. So when you look at the buyer scorecard, which gives you an indication as to whether you should be long or short a currency based on fundamentals, interest rates, inflation, GDP, etc., etc. There's nothing really that is particularly strong as a buy or a sell. All of last year, we very rarely had anything go above 10. Yeah. Anything above 10 is a very good, strong buy or sell. It's a score out of 14, as it says there. We haven't got anything that is a big, strong buy or sell at the moment. And I don't think we're going to get much this year either, because the reason there's been no strong buys or sells is because everybody's been increasing interest rates, which increases everybody's currency strength. And if everybody's increasing at the same time, nobody has a bias or an advantage over another currency. So that situation is now just going to be reversed. So nobody's going to have a massive bias over any other currency, because when one of them starts to drop interest rates, everybody will start to drop interest rates. So let's say the euro drops interest rates first, the euro will temporarily become weaker than all other currencies. As soon as the US drops its interest rate, the euro and the US are both weak, which makes them equal. Yeah, so that's what's going to happen. It's kind of like this. We've been interest rate rising, and now we're going to interest rate drop. Speed of drop is the unknown. That's the variable we just don't know, which is what's going to distinguish whether something's going to be very, very strong or very weak as a currency. So so that's what we've got coming. So as usual this year, it's all going to be about CPI figures, interest rates, et cetera, et cetera. So it's the same thing, except we're just going into reverse as to what we've had for the last year. DAX is just starting to re-rally. FTSE, that initial break hasn't gone anywhere. So DAX is looking like it wants to go long. Hasn't quite broken out of that opening range yet, but we'll see. So yeah, basically we need to keep in touch of CPI and inflation as usual. But other than that, it's just normal market movement. So there's no real advantage in saying I only want to go long or short on anything at the moment, because everybody's interest rates are frozen. Yeah. What we're waiting for and what we want to see to kickstart this year basically is for the first country to reduce their interest rates, or say that they are definitely doing it when they're doing it. Yeah. So at the moment, the interest rate change is all flat. The first person to do it, I think personally, this year is going to be the euro or probably the US. But these guys are getting a bit close to target. So I think they'll probably be the first one to drop 4.25. When it's going to happen, again, we don't know. This month, probably not. Probably not February. March, I'd be surprised if we haven't had somebody make a move by March. And that is when we're going to start. So you will find when the first time that they drop their interest rates, let's say, for example, euro does, the euro will become massively weak for 4 to 6 weeks. That'll be the first squeeze of the year. If you're long the euro when they change those interest rates, you ain't getting out. Nothing you can do about it. So that'll be your first squeeze of the year. If you're worried about it, just short it. Yeah, don't take any longs on the euro. Yeah, same way as the last month of last year or last 6 weeks of last year, I did not take a long trade on the yen because we knew that was coming down. Everything was coming down on the yen. We knew the yen was going to power up. This year, they are going to increase that from a negative 0.1 to a 0, possibly even a 0.1 positive. That I'd be surprised, but they're going to go to 0. When they go to 0, that yen, you won't see that go up for 6 weeks. It will just go down. Everything will go down against the yen. The yen will power up. So if you're worried about it, only go short everything against the yen. But when I say it's going to go like that, it's going to go like that. But on the way, it's going to do this. Yeah, because every move is going to have a profit take on it as well. So you can still trade in both directions on everything. But some things are going to start to squeeze in the same way as last year when the interest rates, or rather the year before when the interest rates started to rise. All of a sudden, the US went massively powerful, and we were like, holy crap, you could get out US positions. So you don't know when it's going to happen. If you knew, you'd obviously do it, wouldn't you? But so all we can do really is wait and look at financial juice constantly, look for those clues to come through as to when they're going to do things. Yeah, so you'll get the odd interest rates are going to definitely not increase this year. We don't see them coming down until Q2. So if they say that, it's like, okay, right, for the next 3 months, we know that we shouldn't be particularly bearish on it, but we want to start looking at being bearish on it in Q2. So you just need to keep your eyes peeled on what's going on here. But from a day-to-day basis, Doesn't make any difference. FTSE back inside the initial pre-market range. DAX is still trying to go long. Right. Morning, AZ. Welcome back. Isn't Germany in recession? I don't know. Maybe. You're right. I mean, the official definition of a recession is 2 quarters back to back negative from GDP. So I don't know what the last CPIs were. No, see, I mean, we went negative 0.4 and a 0. So technically, that is not negative. So no, that is massively negative, but we are forecasting a positive. So if that comes out as a negative 0.1, Germany will officially be in recession. But not at the moment, it's not. But this is month on month. So it's actually, I mean, depends, you know, the official figures are taken on quarterly. But if you see something coming down for 3 months on the trot, and then in month 4 it comes down, you can probably say, yeah, actually that doesn't look good, does it? But I don't know. But whether something is in recession or not doesn't necessarily affect whether or not outside parties are going to invest in that currency moving forward. Yeah. So if the inflation figure is still good, if the interest rate figure is still good, you're still going to put money in euro. Still going to be strong, isn't it? Inflation isn't the be all and end all for why a currency is strong or weak. Inflation is what at the moment we're in at the moment we are in a situation where for the last 2.5 years, our entire world has been driven by that. All FX movement has been driven by that. What are they doing with that next? And that is not unusual. That is what happens most of the time. But right now, it's all about that. Whereas it's less about this, it's less about that, it's less about that. It's all about that. When we get back to normal conditions where interest rates very rarely change, which is the norm, they do change, but, you know, not constantly going like that or constantly going like that. It's like that. You see the graphs normally with interest rates do that. Yeah. When we get back to that situation, this will become much more important. That will become much more important because that has a knock-on effect on that, which knocks onto that. But yeah, right now, it's all about that. Everyone is sitting there, literally everyone in every bank at the moment is sitting there going, who's going to be the first to press the button? Who's going to be the first to drop it? That's when they're going to start making their moves. But at the moment, we don't know, do we? So this is why we've got to keep our eyes peeled on here. We've got to keep track of what's going on here. If that does not come down, go up, i.e. that becomes a negative, they're going to need to drop those interest rates faster, which is going to devalue the euro. So you can kind of right now look at this. If that comes out red, short the euro. If it comes out green, long the euro. Or don't actually necessarily long the euro, don't short it, sort of thing. So that's really all we can do. But again, last 18 months, we were in a situation where we hadn't seen it before. It was that word again, unprecedented. It's what we had in COVID, didn't we? It was unprecedented. Interest rate rises 18 months from where we were to where we were, unprecedented. This year, we're going to do the opposite. We've not done this before either. So this is all new to everybody. We haven't been through an interest rate rally like this. We've never traded through an interest rate decline like we're expecting. Something could go wrong. All inflation figures could stabilize for the next 6 months. They're not going to drop interest rates if inflation stabilizes. So we could be sitting here in 6 months' time going, when's somebody going to drop the interest rates? We don't know. At the moment, the forecasts are March, but that's all we've got, forecasts. You know, forecasts are as good as the actual thing that happens off the back of the forecast, aren't they? So we will see. We will see what happens. But I don't know whether we're going to get recessions or not. We'll have to wait and see what the figures say. So starting off with the Aussies, as you can see, Aussie dollar CAD, we're sideways. We have been since the last live room. So we had that massive spike of news. We came back, retested, completed the propulsion gap, and then we just sat there. So your guess is as good as mine. There's no RSI extensions to look at. In fact, if we look at the dashboards quickly first, there's no ADRs today, no weeklies. Obviously, it's the first day of the month trading. There's no RSI extensions. So the market is totally flat. Yeah, we are reset. We are ready to go. There's just nothing to look at. So, from an RSI perspective, obviously, you haven't got any signals to get into anything new. We're waiting for the market to make its move and decide whether or not we're going to start off bullish or bearish with all the currencies. So at the minute, we're where we are. So you want to be looking at the highs. If we get up to these highs and you get a decent reaction, you could short. If you're getting down to the lows, long. Yeah, that's ADR low. That's not far away at all. So we are just sideways at the moment on this. No idea where it's going. Aussie dollar Swiss. So the Swiss franc, as I said last week, as I said this morning, last week had some massive moves. We've got a big gap up here. Gaps get filled in. We don't often get gaps in Forex. Quite rare now to get gaps in Forex. But obviously, we've had a long period of market closure, and obviously we've got a gap up today. So today, good gap fill short, isn't it? But that low there, or sort of that area there, is our upside resistance. So that was the previous resistance, turn support. So if we get back up to here today, i.e. we come and start to fill this propulsion gap, that'd be a nice looking short down to that gap fill. But right now, it's just, we're doing anything, is it? So we gap up into the highs. And we're kind of in this, got a range high. We've put a new range low in there, haven't we? So this is kind of what our range is at the moment. We're bang in the middle of it. So it could come up and retest that area. It could come down and do that gap fill today. Don't know. It's going to do one or the other, isn't it? But the Swissy has had an unbelievable amount of movement last week. So I had the charts open last week. I wasn't actually trading, but they're always open on my desktop in the office. And I could hear the ADR alerts going off, so I came in and had a look, and it was all Swiss franc going nuts. So we had a lot of money piled into the Swissy. I think these were 175s, maybe even 225s. So 89 off of a 51. So yeah, not far off. That's 175 ADR, 80. So we had these big, strong moves. There was no news that I could see anywhere on Financial Juice. So I was scanning Financial Juice every day, as I always do anyway. There was nothing on here that would lead me to say there was any reason you would be buying the Swiss franc. There was no emergencies happening. There was just nothing going on that was really, why is the Swissy powering up? So all mean reversion opportunities, as far as I'm concerned, to come back and retest that area on all these Swiss franc pairs. Aussie dollar yen sideways. Again, we've got a gap up this morning on this one. So any gaps you see are likely to get filled, whether it's going to run away and try and find a resistance before it comes and fills them, or whether they're going to get filled immediately. Don't know. But you've got a target there. There's the gap. So if this runs away and you get an ADR extension to the upside or an RSI extension or anything, short it down, and that's your target, that gap fill. It will get filled at some point. Highly, highly likely. Saying that, though, we don't get gaps very often. I haven't looked at gaps on Forex for ages because we just don't get them. But yeah, gaps normally get filled, don't they? So got highs up there, obviously an easy double top. We're in this propulsion gap at the moment, which obviously it's gapped out of. So again, it's very hard to analyze anything until you know where the market's going to go. We're an hour in, we have no idea. So it's pushing up at the moment. So I'd be looking for ADR hit to the upside, double top for some kind of bounce. You might get an RSI extension up there, but yeah. So again, Aussie dollar yen not really gone anywhere. We are expecting the yen to drop, everything to drop against the yen at some point in the next X number of weeks. We're waiting for some news out of Japan as to what they're going to do with these interest rate rises. The Japanese are incredibly unreliable when it comes to all news, as we know. We monitored them for the last 2 months of 2023, waiting for that intervention move, and it was just a mess. It's always a mess when you got the yen involved, because they just do not operate the same as all other currencies. So I've got a long on the Aussie yen at the moment. Long term, want to be looking for shorts, but haven't actually got a target on that trade either. So I'm just going to go for below the highs, basically. Just come up and see if we can get that propulsion gap filled. That's within ADR. So we're looking to target that. But again, we can't really tell what way anything is going at the moment. We've had this massive accumulation. We had that big yen strength coming in at the beginning of December, which all got undone. And obviously, we've been sitting here for the last couple of weeks not knowing what we're doing. So Aussie, New Zealand, totally sideways. Again, gap up. This Aussie's got a massive gap up. We are above the highs now. So Aussie, New Zealand, we've got highs coming up there. And then we've got these highs at the top here. So we've gapped up above that propulsion gap. So again, the gap fill play is there. It's whether or not we're going to come down and just do these gaps this week, or whether we're going to rally away from them. If we rally away from them, we've got lovely targets to trade back to. This is not far away from getting extended either. So yeah, again, it's very, very hard. There's no directional bias on either of these. As you can see, we've been sitting there. So we are at the moment on a breakout. Is it going to be a false breakout or not? No idea. So, you know, today is all about refreshing and having a look at where we are, rather than going, that looks like a good trade, because you've got no idea where anything is going to go this week. So we'll see what the market's got to put into the market, basically. Don't forget, the banks have been shut. And businesses have been running on very, very low sort of skeleton turnover. So what you're going to find this week is the banks and institutions will get a load of orders filled that they've had waiting on their desks, and there'll be a load of orders coming in from businesses who are looking to kickstart the year. So there could be an awful lot of volatility coming in this week, just normal market orders, which is going to, you know, it's not going to be directional. It's just going to be whatever the hell the market needs to put in to get it to go, to get it to start moving in a direction. So could go absolutely anywhere this week. But as usual, looking for big, strong moves so that we can start to mean revert. So highs, if we can get up to ADRs, they're going to be, at the moment, most ADR extensions you're going to find are probably going to be around about a decent support resistance from December. So that's where I'll be looking to start positions. And again, when I've got the hedging support and resistance strategy kind of a little bit more fine-tuned, that'll become much more evident. You know, if we are trading up to here, I will look for signs of weakness to get into a short position, and I will hedge the rebreak. So, you know, but at the moment, we don't know where we're going at all, do we? So, Aussie dollar US sideways. We've got the massive gap fill from the that was the CPI, wasn't it? 13th of December. Just need to remind myself. Ages ago. That was FOMC, wasn't it? Yeah, sorry, that was the interest rate. So that was the last FOMC, 13th of December. That's what that gap is. So DAX is off, up at ADR. So we've got an ADR hit on the DAX. Oh, that's really annoying. Got triggered on that shortlet. 2 pips. Difference between nice, clean, long break and a hedge today was 2 pips. Annoying. So yeah, so we got the interest rates. So obviously interest rates didn't change. The only thing that's going to be happening with the US interest rates is they're coming down. So the market sold off the US. We've just kind of ground away on the US since then. So overall, you want to be looking US starting to weaken moving forward, Euro starting to weaken, pound not quite so much. It's still very hard to read the pound, very mixed, but as I say, you know, nothing goes in a straight line. So you should really be able to trade everything in any direction at the moment. That is not really a fundamental shift, so I would expect that to get filled at some point. You know, this sort of movement and run is kind of what you would normally see when there is an unexpected interest rate change or an unexpected inflation figure. We haven't had that. We just had an as expected inflation figure. And all they did was they brought forward potentially the interest rate drop. Sorry, that was an interest rate number, wasn't it? Not inflation. So all that happened, the reason this happened was they said, we're going to drop interest rates probably a bit faster than we thought we were going to. So obviously the market sold off the US. That's all that is. We haven't heard anything yet. So again, it's kind of like a reset this week. It's like, what happened here happened last year. It's new year. Everything's new. Let's start again. Which way are we going? So this week will give us an indication of where we're going to start. A little bit of a bull run in the US to start the year, and that would mean the indices will need to drop or what, but we'll have to wait and see. So there's your Aussie US. Look at the CADs. We just catch up on the chat. Are there bearish trades which cover a 70% marginal difference towards the downside? Given a put option or call spread? I have no idea what you're talking about, Paul. Sorry. You're talking about options. I don't trade options. I have no idea what any of that means. Added numbers, percentages to assist my understanding, but could you correct me and explain the influence or possibility of a 7-3 P&L along with... You're obviously a way more advanced trader than I am, Paul. I have no idea what you're talking about. Sorry. I don't know what any of that means, so I can't answer that one. There you go. That's chat caught up on. I'm confused. CAD Swiss. So I had a trade on this one. I posted in the Telegram group when the EA kicked in, but this is why I turned the EA back on the 27th because of that move. I was like, woo, nice big Swiss franc move. Looking for it to mean revert. So I got in along there. EA added the second out there. So we haven't gone anywhere. It dropped, then it's back. Then, you know, we haven't gone anywhere. So I would expect this Swiss franc gap to get filled because there was no reason for this movement in the Swissy. There was no fundamental reason anyway. It was just a big order went in. Obviously, we had light volume, light liquidity. So if you've got a big order that needs to be filled and you need to fill it, and there isn't anybody that wants to take the other side of that, you're going to stretch price to try and find where the next orders are, and that's why you get these big moves. So no fundamental reason for it. So again, I would suspect we'll be back up filling that gap on this one, same as all the other Swiss franc pairs, basically. So CAD yen sideways at the moment. As you can see, that was the big move on the yen that we had. We mean reverted that into a V-shaped recovery. Since then, we've had one kind of big move and we haven't gone anywhere. So all we are is contracting basically at the moment. Your guess is as good as mine as to whether that's going to break long or short. Long term, we'll be looking for shorts on everything against the yen, but maybe not for the next 4 to 6 weeks. Don't know. So wait for something to set up. Look at support resistance levels. That's a beautiful double top, and we've got obviously that high there. So this propulsion gap, looking for a fill of that propulsion gap. Once that's filled, be a nice place to start shorting from. Hopefully we'll get either an ADR hit there. Well, you would if you got there today, you'd be an ADR hit, wouldn't you? Or an RSI extension to start getting into shorts. And the Swiss yen had a short on this one last week. So that was your Swiss franc move. That was your RSI extension. So EA got me in there, straight in, straight out. I closed that one out on the 29th, just before the market closed. Basically, just didn't want to hold anything in case we got weird gaps. But so yeah, that was a nice, easy in and out. It did come down, fill that propulsion gap. So we returned to the origin of the move. I had an opportunity to exit there, and then it rallied up. And as soon as it gave me that gift on a plate, I took it off again. So didn't go anywhere, obviously, as you can see. All we did was that. But yeah, out on that one. So again, we've got highs coming up. This big, strong blue line there is a monthly resistance. So that is previous month's high. That's the high of December. That's the previous month's high, November's high. So if we can push up into there, we'll be looking for a nice potential bounce off of that. Whether that then turns into a break, highly unlikely. Don't forget, if the euro is going to be the first to reduce interest rates, the Swiss franc will reduce with the euro. And if the yen is going to increase those interest rates, this thing is going nowhere there fast. So again, until we get a catalyst, a news event, a hint on financial juice, we just got to wait. So that's the Swiss yen. Have a look at the euros. Morning, Rezvan. Have you started to sell the DAX? Nope. I'm hedged on the DAX at the moment. Sell the DAX. It's going through the roof. Why would you sell it? It's flying. You really want to get in front of that? Buy. Just want to understand how those figures are applicable context to your Forex trading strategy plans. With fundamental, you're talking about fundamentals, Paul. That's what drives the market. If you don't understand what this is and what's going on here and what these are, you shouldn't be trading Forex, because this is what makes the thing go up and down. So if that's what you're referring to. But my plans, it doesn't affect my plans specifically. Yeah. You need to be aware of news, because news drives the market. So, for example, nothing much is going to happen today. I know that because there's no news. So if there's nothing to drive the market will be purely commercial and speculative orders. Tomorrow at 3 o'clock, we've got the PMI figures coming out, which is the manufacturing inflation figures. If they come out inflated, we could get a rally in the US. So you're looking at this for where is the market going and when. Where it's going, you can't really tell. When it's going, you can tell to the minute. You can time it. So it doesn't really affect me from a directional bias. But for example, if the Japanese said today, we are going to increase our interest rates and it's going to happen in January at some point, I would never press the buy button against a yen pair. So you have to be aware of how fundamentals affect the market, in the fact of, if they say they're going to increase interest rates and then they come out after that and say, actually, what we might do is go to 0.25 and fall in line with the rest of the world and use 0.25% increments rather than 0.1s. You do not want to be doing anything but selling everything against the yen. You need to know that. It doesn't mean the yen is going to go down today. It probably would, but or everything go down against the yen. But you need to be aware of what is going on in the world, because that is what makes the thing move up and down. Banks and institutions place their money where they're going to get the best return on it. Yeah. Think about yourself. You've got 100 grand in the bank. Do you want to put it in a bank that's going to give you 5% interest or 2% interest? 5. Yeah. If someone's got high interest rates, their currency price is going to increase. It's going to get investment into the country. You're going to get savings into the country. Your bonds are going to get bought at higher prices. It's all going to drive your currency. This is why we focus on that. But from a day-to-day basis, flip a coin. This week, regardless of what these figures say, it will go up and down. And that's why you should, if you haven't already, go and watch the Position Trading Bootcamp. Because that will tell you how the market moves, why the market moves, and why you, I, or Mr. Barclays have absolutely no idea whether the price is going up or down today, the next 5 minutes, or the next week, because there isn't one person driving the market. You've got 10 banks and institutions driving the market. If they all disagree with each other and you want it to go long, it goes where it goes. But long term, it will go where the fundamentals drive it, which is why you need to pay attention to what's going on in the world, basically. That's all it is. Did you have any trades on during 2015 Swiss unpeg? Yes. Yeah, I did. I'm surprised you haven't been in here when I've talked about it. I've talked about that loads of times. I was with Alpari UK. They went bust. So yeah, I was on the Swiss. I was on the US dollar Swiss when the peg was removed, and it wasn't fun because I lost all my money. Well, I didn't lose all my money. My money got locked into escrow, basically, which took me months and solicitors to get it out. Have I ever experienced a 400 to 500% ADR move on FX? Yes. Mumo, where have you been? We've been talking about literally that for the last 2 months, every single day, haven't we? What did I say when we get to $150 on the US dollar yen? Get an intervention move, which will be somewhere between 400 to 800% of ADR. Have I been talking to myself for the last year? Yes, you will get 400%. 400% ADR moves are going to happen. Look at the ADR, right? Why do you think that stops at 225 ADR and it says 2%? Yeah. The market, 2% of the year, will get above that line. If there is something that can drive the market above 225% of its average daily range, it could go 6, 8,000. I don't know. It's just something completely abnormal that has driven the market nuts. There's nothing you can do about it. If it happens, it happens. And if you're in a position on it and you're the wrong side of it, just wait for it to calm down, then take another position and then wait for it to revert it, because it will. If it does that, it will do that. Yeah. So you just got to wait. But yes, it will move 400%. That's why we trade with 0.1 or 0.25% of our account on each trade. Because if something moves 400 ADR against you, worst case scenario, you might be in 2 to 3% drawdown on that position. That's it. But incredibly rare. You'll count on one hand the amount of times you will ever go through you'll ever experience a 400% ADR move. I'm just trying to think if we had one last year. Probably the US dollar yen intervention was the closest, which was 290. That was only 3 ADR at the time, wasn't it? That was the biggest one we had last year from memory. 290 off of at the time ADR on that was about 80 odd. So I think that was about a 300 ADR or something, wasn't it? Can't quite remember. Last year seems a blur now. It's gone, isn't it? Forgotten about it. 76 watching, 16 likes. Got 78 now. Don't know how many likes we got, but let's get some more. Happy New Year, Dancers of Wolves. Welcome back. Happy New Year, New Lee. No, not. I'm still the same. Nothing's changed. Grumpy old man. Right, euros. So euro is in a big holding pattern at the moment. So this is December. So you can see obviously the lines here. That's your December high. We spent most of December doing virtually nothing. And all we've done is we've contracted range in the last 2 weeks. So with everything, as I say, ADRs at the moment are really contracted. Your ADR numbers are small. So that means if price moves back to normal range sizes like that, you're going to get ADR hits. So for the first week, 10 days, you might find you get a lot more ADR hits than normal because price is just reverting back to normal and because it's been sitting there doing virtually nothing for 2 weeks. So we are totally sideways, euro odd here. Absolutely no idea where we're going. We've gapped down. This Australian dollar's had a big gap. So we've gapped down into the lows. I suspect we'll fill that gap. And then obviously where we go from there, nobody knows. So nice little long there if you wanted it. We'll have to wait and see what happens with CPI for Germany, which is coming out this week. So we'll have to just wait and see what happens with the fundamentals moving forward. I had the conversation with my brother-in-law at Christmas about, no, I'm learning, Lee. Keep talking. What? I had a conversation with my brother-in-law because when I saw him before Christmas, I said there's probably another interest rate rise coming in January. And then all of a sudden we had that CPI drop with a 0.5% difference on CPI for the pound. All of a sudden the outlook in the pound is, woof, we're definitely dropping interest rates. Not only dropping them, we're going to move them forward as well. So we need to be aware of what's going on with these fundamentals at the moment, because at the minute, the euro, we're waiting for it possibly to be the first interest rate drop, which means you want to be shorting everything euro. But all these figures coming out means that, if we get a big bounce on the CPI for Germany this week, for example, euro is going to rally. So at the minute, it's impossible to pick any direction on anything because we haven't had any news. We've got no indication of where anything's going at the moment. So literally anything goes, trading anything in any direction at the moment. I'm still just going to be waiting for, obviously, any setup. But right now, I would say there's a nice little gap fill there, obviously, but looking to get up into this propulsion move, which is going to be middle of that massive range. So by the time you get to there, your mid-range, it could drive up into there. It could come back down. It all depends on what the news is going to do. So at the minute, totally stuck sideways. There's absolutely nothing you can read into anything there at all. Euro CAD, virtually the same thing. We're in a big old sideways range, which has contracted down into a smaller one in the last 2 weeks. No idea. It's going to go one way or the other, isn't it? Euro Swiss. So this is the only one, all these Swiss francs that have had this move. So we've got a nice propulsion gap target to the upside. Euro Swiss, I got into a trade on that drop as well. So I got one there, got out there. So that was a nice little trade before Christmas. Before New Year, rather. Again, target was that level there or back up into there, fill that gap. But, just over the Christmas period, I just want to take money when I can get it. So, yeah, looking for it to push back up into there. Gap fill, first of all, may come down and retest that December low and then potentially coming back up into there. Euro Swiss is the tricky one. It's always the tightest of the bunch because when the euro moves, the Swiss moves. So if the euro drops, the Swiss drops, which means that all you're doing is you're countering each other out. So it doesn't tend to get an awful lot of movement. But when that euro does start to drop, it'll be a real grindy one. I'm just going to see if I can look at the last euro move from 2020. Actually, yeah. So that's what you'll find you'll get when the euro. That 2009. I've gone back too far. 2020. Just that one, yeah. But so that's what you'll tend to find. You'll get a sort of a real grind on the euro Swiss as the euro starts to decline. So we'll see what happens, but it can be a very grindy pair. The Aussie New Zealand, the Euro Swiss are the pairs that you can get into trouble on and find it very difficult to get out of because they both move together. It's hard to get exits on them. So they both devalue at the same time. And you usually find the major, which in this case is the Euro, and in the Aussie New Zealand, it's the Aussie, will be the one that takes control and it just never gets out of it. It will eventually do that, but you tend to get into squeezes on them. So one to watch basically when we start to get those interest rate movements, but at the moment you can't do anything with it apart from normal mean reversion back to propulsion when you get moves like this, which is good. Euro pound, that's just coming back to fill the gap. We've got a gap put in and we're filling the propulsion gap. So yeah, going short at the moment, just waiting for an extension on this one. This again could go absolutely anywhere at the moment. Euro pound, this has got very, very tight ADR. It's only 41. It's normally about 50 odd. So I'd be looking for nice, good support resistance areas. Propulsion gap fill will probably be a good long. But yeah, just waiting for an RSI extension on it. This one is one that I very rarely traded last year because it just doesn't get extended, as you can see. It's not often. I don't think I probably had a handful of positions on this one last year. Just doesn't go anywhere. So, but right now, fundamentally, we are more like that. So the market structure on this at the moment, as you can see, is looking pretty decent for a drop. The pound is more neutral, I would say, than anything out there at the minute. So euro, I think, is probably going to drop a lot faster and a lot quicker. So we will see. But wait for the fundamentals to confirm it, really. Euro yen, same as everything else with the yen. Shorts. At some point, it's going to be the Japanese will just come out and say interest rates are going to drop, or they won't say anything and they'll just, pop. They won't say anything, they'll just do it. So we'll get the next interest rate and everyone will be going, oh, well, they haven't said anything about it. And they'll suddenly go, we're zero. And the yen will just drop. Again, as we were talking, 400%. It will just go. So we'll have to wait and see on that one. But at the moment, just sideways. Propulsion gap fill is done. We're gapping up. Could go either way, but there's no extensions anywhere, no opportunities. Euro New Zealand, totally sideways. Guess is as good as mine on that. Propulsion gap target to the upside is the obvious trade at the moment, up into there. But if it gets back down into the monthly low, look for support bounces at ADR. So we just wait for the reversal alerts on the lower time frames when you get down to these hourly and 4-hourly levels. Euro US, that's the one I had a short on off the RSI extension last week. Again, I think we'll probably feel that propulsion gap. That was a bit of an overreaction, and it was just before Christmas. So we sat there after it and did absolutely nothing. And since then, you can kind of disregard all this price action since that 14th. It's not real. It's just what happened over Christmas type thing, whatever they needed to do. So I think we'll probably come back and do that. So probably some US dollar strength, but we'll get an idea this afternoon as to whether the indices are going bullish or bearish. If the indices go bullish, the US dollar will drop, which means this will rise. But as we've seen from the DAX this morning, TP hit. Okay, so I'm out the DAX long. Waiting to get into an aggressive short on that. So as you can see, the DAX certainly has gone bullish. FTSE, dead as a door now. So we'll see what happens with the US indices this afternoon as to whether or not they get a rally. But that will give us kind of an inkling as to what the US might do for the first couple of weeks, but we'll see. So that's your euros. Again, there's not really anything potentially set up. You can just be looking for propulsion gap fills, basically. And there's two very nice targets to the downside. So either we're going to come back up into there and then drop, or we're going to come down to there and try and test that at some point. Let's smash that like button. Yep, that's always good. Approaching 5R on the DAX. So yeah, there we go. Just covered that. I'm out. So I'm out along and looking for an aggressive exit. So we're up at this high at the moment. So we had that little spike up there, which put in the high for December. So that's really where the market traded up into and then froze. That I would suggest is probably the New York Open. Yeah, 2 o'clock. So that's the New York Open. So we just had some volatility at the New York Open, which then drove back down again. So that is really your high 125 ADR. And then we've got that back up there. So looking for no more than another quarter of an ADR movement before you're going to start to get some sellers coming in. If the sellers don't enter now, you've got another quarter of an ADR of drawdown before you're potentially going to get that drop. But as I said, remember, ADRs are contracted at the moment. Yeah, ADR 10, if you count back, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 9 of those days were really tight ranged. Yeah, so there's a good chance ADR is going to get extended today. So you could see some 150s, 175s today. Because normal range is bigger than what we've had for the last 2 weeks. Which is why it's important to keep abreast of, obviously, support resistance levels. You see, there's nothing else to look at. This is all-time high DAX, basically, isn't it? So we're retesting all-time high. Likely we will get people looking to sell all-time high double tops, which means we'll get a pullback, probably into that propulsion gap, which is just about to form there, if it forms. And then are we going bull? That's the question. We've still got all these. I mean, look at this move, this rally that we looked at from December. That's the December rally. And then we were like, oh, are we going to get a Santa rally? We didn't get the Santa rally this year. We got, well, not on the DAX anyway, we got a sideways move. So the Santa rally kind of happened the first 2 weeks of December. Normally it happens the latter end of December. We didn't get it. So we've got this massive rally. Don't forget, they have not profit taken anything on that. So this could be an accumulation break and we get another leg. So this week we'll get an indication as to whether or not they are going to try and rally again. And if they do, they do. Which means US down, Euro down. Did you get grief from family in the beginning of my career? No, not really. What sort of grief? Family are interested in, is the money still coming in? Is the bills being paid? Can we go on holiday? There's a new Xbox out, Dad. That's what they're interested in. So I kept providing that, so I didn't get grief. No. Don't forget, I transitioned into trading. So I didn't stop a job and then start trading. I moved, trading became the main income over time. So it wasn't a drop this, start that. I had income coming in. So if you stop and then do that, and then, yeah, I can imagine you probably would get grief. But I did get grief in the respect of, why the hell is that laptop next to us while we're watching telly 24/7? And that still is the same today. I have my tablet next to me at all times with charts on. I never don't have a chart open somewhere. Wherever I am, there's a chart. Unless I'm out on mobile phone, I don't use my mobile for trading at all. But I go to my spin classes and I walk home from my spin class, and the first thing I do is open my phone up and have a look at what the US indices are doing, because I might well have in trades on them still. It's probably more of an addiction than anything in the world, this job, because you have constantly got skin in the game. You've constantly got money in the markets. Therefore, you are constantly interested in what's going on. I've constantly got financial juice popping up on this and on my tablet downstairs. We're sitting down there watching the news. It's like wife talking to me on the left-hand side and me zoned out. Why are you not listening to me? It's FOMC. Shh. 7 o'clock. You know, you can't let it go. It's life. This is your life. This is what pays your bills. Unfortunately, it runs 24/5. So it never sleeps. Therefore, you never sleep. Good question, Franco. In addition, Lee, how did you manage the transition, including the pressure to make money to cover the bills? So, as I said, I transitioned. So I had a web design company. I still do have a web design company. It doesn't do anything. It's still there, but I was a web designer. So I had income coming in, which allowed me to trade. So the transition from the earnings is what changed me into trading as an income, basically, because what I did was stopped focusing on that and focused more on that, because that paid more money. Therefore, that just dropped and disappeared. If you're going to do this full time and you want to go full time, what you need to do, I would say, and this is my golden rule for transitioning to becoming a full-time trader, you need to have had 2 quarters where you have been profitable. And it could be on a demo, but ideally on a real money account. And it doesn't have to be a money account that's big enough to pay your bills. It has to be a money account where it's real money, real risk, and you're trading properly. You have to have done 2 quarters where you've been profitable, and you can look at your P&L and go, if I had X amount of money, that percentage return would have paid all my bills. Then you need to have 3 months worth of money in your bank account to pay your bills. So, for example, if you have an outgoing of 5K a month to pay all your bills and live, you need to have 15K in capital in your bank account to pay your bills. And you need to have the money in your bank account, in your broker account, to fund your trading. Yeah. Because if this doesn't work out and the first month you do not make a profit, for example, you run into 2 squeezes on the first month and they go wrong, or you have a bad run, you're trading stock indexes and you have a bad run where you get a break even and then you get a negative 2% or something. Yeah. You've got to pay your bills. Right, this isn't the same. You've seen me trade this for years in here live every single day, and you see my P&Ls. Yeah, you look through my P&Ls. That was an 8% month. That was a 3% month. That was a 16% month. That is a 2% month. That is a 19% month. That is a negative 9.47% month. Yeah, I lost 10%. How do you pay your mortgage that month? Yeah, you need money in the bank to pay your mortgage. If that's going to happen to you on month 1, 2 things are going to happen. 1, you can't pay your mortgage. 2, it's going to knock your confidence through the floor because you've just had 6 months worth of, holy crap, I can do this. And then as soon as you go live with real money or rather with proper money, bang, you get a 10% loss month. They're coming. I'm going to get them this year. I'm going to have a minimum of 2 losing months this year. 6%, 8% loss. Yeah, 10% loss that month. September. 21%, 13%. Yeah. So the thing you've got to have is that money there in the bank to pay those bills. Because this job doesn't pay you daily, weekly, or monthly. It pays you an amount, a percentage return on whatever money you've got to trade with over the period of 12 months. They're not all going to be profitable months. Some months you're going to sit down, if you run into a 25% month, the first month where you make 25%, you're going to go, holy crap, I'm going to double it. I'm going to go and get a bank loan. Boom. Next month is a 10% loss. What have you just done? You've doubled your account and you've doubled that loss. You've wiped out your first month profit. You're back to break even. What's month 3 going to be? That's real. That's what happens. Yeah. No one sits here and has a winning month every month, winning week every week. You've seen me do this for years. It doesn't happen. That's real world. Yeah. So you've got to have money in the bank. This is where I have the Lambo problem. Yeah, everyone comes and they show you, the Greg Seckers are showing you his Rolls Royce, his massive house and stuff. Yeah, that's all paid for by trading education. No problem. I have no problem with people running businesses. Yeah, he's providing a service. You want to learn how to trade? He'll teach you the basics. That's great. But that isn't what you're going to get. You're not going to get a Lamborghini or a Bentley or a private jet or a massive mansion doing this job. You're going to return at best 100 to 150% return on investment. If you want to earn 100 grand, you need 100 grand to trade with. Yeah. If you've got 10 grand, you're going to earn 10 grand. If you need 5 grand a month to live on, you can't trade with 10 grand. How can you? Not real. So you've got to have 3 months worth of money in the bank, real money. So you've got to save up for a year. Think of it like you're going to buy a house, right? If you're going to become a professional trader, save up for 12 months. Yeah. Put aside 1,500 a month. Yeah. Into a bank account so that you've got 15 to 20K saved up. Yeah. And then go full-time trading. This is not your trading account. This is money sitting in your bank account because you got to pay the mortgage. Yeah. You're either going to lose your house in 3 months or you're not. Take that risk. Real world. You can't start a business without money. This is a business. Or you do it part-time. You transition. If you're lucky enough, like I was, to be in a business where I could spend half of my day watching charts while doing my job, this is such an easy transition because all of a sudden that thing, you see that P&L going, always profitable. And yet I've got my income coming in, and now I've got another income coming in. You've got two incomes coming in. If you can, keep both incomes coming in. It's much nicer. But that income ties you to a desk. That income, I can go off and do whatever I like, because trading H1M5, I only have to look at the charts once or twice a day. It's a time balance thing. After the live room, I can go off and do what I like, because I'm not tied to a job. I can go out for the day. I come back for this afternoon session, but I can go out for the day because I haven't got a job that I have to sit here and be in a 9 to 5. That's the difference. You're buying yourself a lifestyle, if you like. And there's many ways to do it. My transition was finding your channel. Yeah, so Virginia says, this however you do it, you've got to find a way to get an amount of money coming in to pay your bills. And, this is where people, I think, give up trading, because they're expecting to be able to make 25 grand a month with a 15 grand or a 10 grand account. Yeah. Like prop. Yeah. You do 100 grand prop evaluation. They give you a 5% daily drawdown. What are you trading with on a 100K account? 5 grand. Because that's all you got, 5 grand. If you lose 5K of that account, you're out. So basically you're trading a 5 grand account. What do they ask you to do? Bring back 8%. So they're asking you to more than double your account within a month. If you could sustain that, we would all be billionaires. You can't do that. It's just not possible, which is why people like Nirav and Greg Secker now run prop firms. Why? Because they're selling demo accounts with everybody else, because they know that you can't do that. They're not doing it. They're making their money out of selling you education. They're selling the dream of being able to trade with a huge lump of sum, which isn't real. It's just all smokes and mirrors, isn't it? So I had a real job once. I call that a replenishing bankroll. Yes, exactly. But my real job meant that I have to sit here from 8 in the morning till 6 at night. This job means I can shut this stream down now and go out and have lunch and walk the dog and do what the hell I like. I don't even have to come back and do the live stream this afternoon. You're not paying me. I don't have to be here. I will, because I want to. But you see what I mean? If I now want to take the day off, I'll take the day off. I took 2 weeks off in December. Why? Why not? Because I can. Because I am my own boss. That's what attracts people, I think, to trading. Not working for the man, not having to work for someone else. But with that comes complete uncertainty as to income. It's a job for the rich. Unfortunately, the poor are attracted to it. That's the real world, isn't it? That's what's really happening, is people want to become rich. Therefore, they try to do something. They see the banks. The banks are all rich. Why are the banks rich? Because they move the thing up and down. If the banks want to make money today, they will press the buy button until it goes up to there and make money. We can't press the buy button to move it up to there. They do. That's why banks can never not make money, because if they want the price to go down, they will make the price go down. Yeah. If their book is balanced and then all of a sudden unbalanced long, they will move it up, because the unbalanced long means they make money. All these people that say they've worked in banks that now sell you courses, they know damn well nothing they can do can ever predict what's going to happen next. Because if they did, they would still be working in the bank. They're not. Dances with Wolves. On a serious note, that's why trading will be a part-time job, because it's part-time. Yeah. A lot of people do this as a second income. A lot of people do this as a hobby as well. And that's absolutely fine. It's fun. It's a bit like gambling on the horses. You're never going to make money out of it, but do you do it every Saturday? Yeah, because I like it. I don't, but people do. And they'll make a bit of extra money out of it. Sometimes they'll lose some money other times. Yeah, there's nothing wrong with this. If it interests you and want to do it as a hobby, do it as a hobby. If you want to do it as a job, you need capital. Yeah. To bet on the horses, I can bet with 50p a pound. I'm never going to make an income doing that. If you want to do it part-time as well, you can adjust time frames, all covered in the bootcamp. What time frame to trade on. If you can only check the charts before you go to work in the morning and when you get back from work in the evening, trade 4 hour, because you only need to check it in the morning because there's only 2 candles painted by the time you come back in the evening. Yeah, you're only going to make a decision based on 2 candle movement. Then you'll have 1 more candle before you go to bed. Then you'll be asleep for 2 candles and you'll wake up for the next candle in the morning. This is why I show H4 M15 as one of the main strategies in the bootcamp, because if you're working full time, this is your baby. If you're in a job where you can have charts open at work, H1 M5, you're going to get a hell of a lot more opportunities. Yeah. Therefore, you still need the same capital, but you're going to have more opportunities. Your goal is to become a fund manager. Do not do that. That is the most stressful job in the world. First of all, you've got to be regulated, licensed. Yeah. Second, you need 5 years track record of you producing a minimum of 10% profit per annum. If somebody's going to touch you with anything less than that, you don't want to piss them off. Put it that way. There's a lot of PAMs out there and they're all utter crap. Most of them are cons. But do you really want the stress of managing someone else's money? That totally changes your mindset. When I press this button now, I don't care. When I press the button now, I'm going, I've got 2.5 million of other people's money on this. Total different mindset. I've changed my mind because it's not my money. If you've become a professional, a profitable trader, and then you decide to manage someone else's money, your trading will change totally. Different job. Afternoon, Evans. Right, let's carry on with analysis. There we go. So there you go. Whatever the question was, that's answered. Fund manager as in not the arseholes in the glass buildings. You mean the bankers? But be capable enough to bring money, people's money, and grow and pay a dividend. Yeah, that's what I said. You can do that. Up to you. I would find that very stressful. Imagine yourself and I have given you 50 grand of my money and I need you to return me X or I'm going to lose my house. The pressure on you is that person's house. If you don't care, that's fine. I care. I wouldn't be able to do that. I couldn't trade somebody else's money because at the end of the day, I'm going to influence their lifestyle. Yeah. I would much rather say to them, if you've got 50 grand to trade, come and sit and watch me my live rooms for a year, right? And if you think you can do this, learn how to do it. Don't pay someone else to do it because that person could have a mental breakdown. They could also get run over by a bus. Then what happens? Where's your 50 grand? First of all, how'd you get it back? Second, now what are you going to do? Start again? Try and find someone else that you trust? Or why don't you just stick it in the bank? Good interest rates at the moment. That's my opinion on it. But I'd be very wary about managing anybody else's money. Everything I do in here is my analysis of 50-50 shot. I have no idea, which is why I say it's either going to do that or it's going to do that. I don't know which it's going to do, but that's where I see the price going. I'm not giving you any financial advice. I'm not telling you to do anything. I'm saying 90% of the time it moves from support and resistance, support and resistance, support and resistance. From where we are right now, it's either going to come up and retest this propulsion gap again and then bounce, or it's not. If it gets up to there and it pulls back and breaks, it's going to retest that level and go. Yeah, possibly. It could push up into that propulsion gap and then come back down again. I'm just laying out what the market does because it's been doing it for years. You can see it on the chart yourself. That's what I see happening over and over again. I have no idea which way it's going. If the person that's given you £50,000 has said, I need to get 5 grand back this month, that decision you're going to make is going to be very different. And Do you know what the other thing is as well about being a fund manager or trading for other people? The whole thing for me, and I think for most people with this job, is I work for myself. If you want to work for someone else, go and get a job. Yeah. Because basically, as soon as you're trading someone else's money, you're working for them. You are their supplier. Yeah. You are accountable to them. If you've got 50 grand of my money and I want to know what you're doing with it, you're going to answer me. Not a good job. Fund managers don't do that much better than passive funds. Exactly. Go and put it in any institution. Go to Darwin X, for Christ's sake. Yeah. Go and stick it in a Darwin. They've got some mental Darwins here that are producing fantastic results. If you've got a serious amount of capital, Darwin X. Good funds. So you're backing long against the ends right now? Yeah. I'm back longing against the ends right now. Sorry, yes. Yeah, well, for the moment, yeah. Yeah. Until something changes. Left me, I quit. I don't have a problem with if you want to do that, dances, but just think about what you're doing. Yeah, you are moving from a job, learning to trade, stand on your own 2 feet, and getting back into a job. You've just changed career, which is nothing wrong with that, is there? If you get to a point in trading where you're consistently profitable, brilliant. But why change that into a career where you suddenly start working for someone else and you're accountable to someone else? You want to take 2 weeks off? You can't. Why? Because you're managing these people's money. They need to know what's going on with it. It's not how I see this job. This job is the fact that on the 14th or whenever it was in December, I said, screw this, guys. I've had enough. I'm going. I'll be back in January. I can do that because that's the job. It's what I want it to be. As long as I can make enough money to pay the bills, that's all I need. I don't want to be a Lamborghini. I don't want to own a Lamborghini. I own a nice 911 that every time it goes into the garage, it comes out with £3,000 of my money in that garage's pocket. It's not fun. It's fun chasing the car, buying the car, picking the color. Owning the car costs a shitload of money. Yeah. I've got a BMW electric sitting on the drive. Brilliant. Anything goes wrong with it, I chuck it back at the garage. It's under warranty. Yeah. In November this year, I'll hand it back to the garage and they'll give me a new one. That's the difference. That's real. All it is earning enough money to pay for the stuff that you want. At the end of the day, if you want a Lamborghini, fine, but you're going to need Lamborghini money to get a Lamborghini. Yeah. And trading someone else's capital will give you a commission. You might as well just go to a prop firm, because if you're going to manage someone else's capital, you need to set out rules. I will not go above this drawdown. This is the drawdown you will expect, because they will be watching that like a hawk, won't they? Came across an Asian dude on private forum. He's running a regulated 10 million fund on the market reversal alerts EA. Is he? Good for him. There you go. Just shows you how well it works, doesn't it? I don't know what he's doing with it, but at the end of the day, as long as he's managing drawdown properly and doing drawdown control, that's not a problem, is it? Look at how many squeezes we had. We only had a couple of squeezes last year, but can you imagine going into drawdown on 10 million of someone else's funds? I don't have anything clever here. What I've created, the market reversal alert CA, is nothing clever. It's nothing special. It just mimics what the banks and institutions do. That's all it does. There's nothing clever there, is it? It's basically a glorified, when you get a structure break, go that way. If price pushes down, measure the distance between that and when the next structure break happens. If it's above a figure that I've entered into the EA, do that again. Doesn't do anything clever, does it? Literally, all it does is it spaces out trades on a chart and waits for the market to move, which is what the banks do. But managing 10 million of somebody else's funds doing it, I don't know. Hey, shall I do an update to the A that breaks it? What will he do then? And do these people know that they've got 10 million of their money running on a $99 EA bought from the marketplace? I don't know. I'd be interested to know who that is. I'd be very wary about letting it do it full auto. Hopefully he's doing drawdown control and managing the positions. But anyway, right, pounds. So as you can see, pound sideways. Everything's sideways for the last 2 weeks. I feel like a broken record a little bit today, but we haven't gone anywhere really on much in the last couple of weeks. Pound, very difficult to read at the moment. So is the Aussie, actually. There's no real bullish or bearish bias on either of those. So we are sideways at the moment. There's a lot of upside targets in the form of propulsion gaps, as you can see, to the upside. So we've had quite a couple of good strong movements down, but then just accumulation straight afterwards. So there's a good chance we'll probably just flip-flop around and push back up again. So for me at the moment, it's more of a long than a short. Just from the fact that I think we're probably going to pull back up into this drop somewhere. But right now it's stuck in the middle of nowhere. If it pushes all the way down and we get a break below that low, then yeah, it'd be a nice little long opportunity, I think. But nothing much exciting going on there. Pound CAD, very much the same, very, very sideways. This propulsion gap is holding very well. So we've pushed down, we've retested, we've retested, we've retested, we've retested, we've retested. Yeah. So holding very well, but we are testing it over and over and over again. Almost every day, every other day, we're trying to go bull on this. So if it does get above these highs and fills that propulsion gap, we could well be seeing a shift in structure here from there. Yeah, so that's the retest there, look. So that could well be starting to rally back up again. Canadian dollar will obviously move with the US dollar. Again, we've got no clue as to what's going on with the US dollar at the moment, so hence the sideways movement. Swissie's dropped. Everything's dropped against the Swissie. We've had a strong Swiss franc. Again, there's no reason for that strong Swiss franc movement. So I've got one long on this at the moment. It's not really gone anywhere so far this morning, and I haven't got a target in place. So target for me is going to be those lows. That propulsion gap. So it's either going to push up, retest those lows, and then break back down for that gap fill, or it's going to come down for that gap fill, and then we could be looking at a push back up into there. We'll see. But right now, long on it. Pound yen, sideways, totally sideways. Again, long on this one at the minute. I don't know what to do with that, really. I mean, I'm just trying to basically just try and get 0.25% or something out of it. So I'll be looking for a push up into that propulsion gap. That's within ADR today. Quite possibly we'll come up and retest that high if we're going to go long. But obviously, if we're going to go short, then it will be added to. But it's not going anywhere at the moment. Pound New Zealand, again, same as the pound odd. We're totally sideways at the minute. It's doing the gap fill. So all these gaps are getting filled on these Aussie and New Zealands by the looks of things. This pound looks like it's weak today. Yeah, it's pretty. Pound's weakening at the moment. We just had the manufacturing PMI figures coming out as a ever so slight negative. Not really negative. It's more of an as expected, but the market's having a bit of a negative reaction at the moment. Pound US dollar. So got short on this one at the moment. Looking for a retest of propulsion. So basically, since I finished in December, we've gone down a bit, come up a little bit. We're basically nowhere, are we? So this is the FOMC interest rate decision, which was as expected. We have retested that propulsion a couple of times and held. So they are looking to sell the US, or they were looking to sell the US there. We need to wait for the market to open this afternoon and see whether or not we get a bull run or a bear run and see what happens. But yeah, I'm short at the moment. That's where my target is, down at that propulsion gap, which is ADR today. New Zealand's pretty much the same as the Aussies. Totally sideways. Not going anywhere. There's not been any entries on this for the entire month of December. So it's just flat. New Zealand Swissy obviously moved down. Retested propulsion twice. We're looking for it to come up and retest this area here. So, but we've got a little gap, which is almost filled pretty much. So, but again, no real directional bias anywhere. It's just sideways, all sideways, totally big sideways mess. So range highs, range lows. Yeah, we're down at range low here. So where we are here, you've missed the entry for the range low bounce and there. So it's coming up into these propulsion gaps. When you get into the middle there's a 50-50 shot of it going up or down. So it's just nothing to do on this at all either. I mean, this week's just rubbish. New Zealand dollar yen, we are holding that propulsion move. Pretty much got filled there, to be honest. So I would probably say that's not really a propulsion gap. It does, however, happen to be buying out of it. So looking for push up into those highs. But again, no real entries. There was a possible short entry there, which you would have got. We haven't really had anything else on it. So again, sideways. Long-term short on the New Zealand dollar yen, only because we're expecting yen strength off of the interest rates when they change them, which at the moment they haven't given us any indication as to when. New Zealand US, again, I'll be looking for that to fill, but we need to wait and see whether the US is bullish or bearish this afternoon. So at the moment, flip a coin, it's going up or down. Same with all these USs, obviously. So US dollar CAD, that's the interest rate. Obviously looks way more bullish than bearish at the moment, but we'll have to wait and see what happens. So the US dollar, obviously, as you can see, has had a weak run in December, only because the market really thinks that the interest rates are going to come down, and they keep bringing forward when they're going to bring the interest rates down ever so slightly. So all we're doing is we're getting slightly weaker and weaker and weaker until we will eventually topple over with that interest rate figure and it will drop. So it's whether or not the markets are going to rally or dump the indices the first sort of couple of weeks of January as to whether or not this is going to rally or dump itself. So we need to wait and see. There's no point in speculating on where anything's going to go at the moment. US dollar Swiss, I've got a long on the Swiss franc drop. So looking to get out there. There's a gap fill to the downside. So again, same as the other, it's either going to come and do that gap, retest that, or it's going to come and fill that gap and then hopefully push up. So there's your reversal in structure, your retest. I'm looking for that sort of movement, basically. And then obviously where it goes when it's got that gap fill done, I have to wait and see. And US dollar yen. So all yens want to be selling. The US dollar yen, long term, that is, obviously right now can do what the hell it likes. But the long term view should be bearish on it. This is the one that is more bearish than any other as well, because when they buy the US dollar, buy the yen rather, that will mainly be done using US dollars. Therefore, the US dollar yen is the one that moves the fastest and the hardest when there is a yen rally. So most of the Japanese speculative money-making decisions are overseas bond purchases. When they want to liquidate and rally the yen, they just sell all overseas investment and buy the yen. Most of the overseas investment is in the US dollar. So when the yen rally happens, the US gets a kick in the backside, basically. So this drops fast and hard, which is why we're always watching this for the intervention moves. So yeah, at the moment, I've got a long on, which isn't particularly great. In fact, what I might even do is just break even on that one because I've got other yen exposure on. I've no idea if it's going up or down, obviously. And this afternoon, we're either going, if we get a rally, and obviously with what the DAX has done this morning with that big move to the upside, if we get a rally like that on the US indices, US is coming down. So I'm going to break even on that one just in case we get a big rally this afternoon. First day back, it's very difficult to know whether or not we're going to get a rally or not. Out of the DAX, nice profit on both this morning. So $250 are there, $150 there. So out of the DAX on the aggressive exit. So they're just pulling back on that move. So we'll see if we get another leg up. Nice morning. That's a good way to start the new year. There we go. Which tablet do you use for trading? I haven't got a tablet. I've got a Microsoft Surface. So, because you can't use custom indicators on a tablet. So I've got a Microsoft Surface, which is basically a tablet, but it's Windows. Happy New Year, Burke. Welcome back. Yeah, so I trade with a Surface Pro. Not cheap. That's the one I've got. That one. 13-inch Pro 9. It's basically a computer at the end of the day. It's literally Windows. It's an i5 processor. You know, it's fast. It just hasn't got a graphics card. So don't run MT5 on it. MT4, no problem because it uses CPU and RAM. MT5 uses GPU or utilizes GPU. So yeah, that's what I've got. One of them, which is obviously also a touchscreen tablet as well. If you don't attach the keyboard, but I do. Basically, my keyboard is permanently attached. I'm really tempted just to shut that lot out and take that 0.5%. You know. And in fact, what I'm going to do, shall I? What's worrying me today is these gap fills on everything that I'm long on. So I'll tell you what I'm going to do today. I am going to stick a trailer on that of 128. I'm going to stick some trailing stops on 130 on that, US dollar Swiss. So I'm basically locking in that. And I'm going to do the same on the pound Swiss because they're both Swiss exposure. They're both profitable, so I might as well just lock some profit in today just to get the month rolling. Pound Swiss, because I'm worried about these gaps getting filled today, which is just going to wipe this out. I've got basically 0.25%, or nearly 0.5% actually. So 100 on that one. Let's see if we get a rally, and just I'll take whatever I take on the pound Swiss and US Swiss. So that'll put 0.3% or something in the bank, won't it? Start the month off with a bit of money. Right, that's all I've got for you this morning. So DAX, FTSE, nice, easy, clean break, done, dusted. DAX, hedge, exit, done, dusted. So very, very easy today. The European indices. So this afternoon, I will be trading the US account, which has got the NASDAQ, the DAX. No, it hasn't. It's got the NASDAQ, the S&P, and the Dow. And we'll see how the US breaks this afternoon. Be interesting to see what happens with those. Just open that account up. Should have opened that up before the stream, really, but anyway. New Year's resolution. Has anybody noticed what's missing today on the charts? What we haven't looked at. Just seeing what the indices are doing at the open. Dow's had a crack at the all-time highs. Rejected. Could have a US rally this afternoon. It's not looking great so far this morning, is it? See, nobody's noticed. Oh, disappointing. So, oil and gold. I am not looking at them. Not even going to look at them. Not even entering onto my radar. So, oil last year, I lost on. It was my first year trading oil properly, trying to position trade oil. Didn't work. Gold, I do not trade anyway. So I have not got gold or oil anywhere at all. This is FX only. And obviously the indices, that's it. So I'm not getting involved. I'm not even looking at them. So if anybody asks me what's going on with oil, with gold, it's a US dollar cross. So let's look at what's going on with the Euro US and everything else. Yeah. And that's what we'll basically trade. So I'm not going to look at them. Reason I'm not going to look at them is because they take up a lot of time. I get asked about them all the time, and I really don't know. Oil at the moment, I had a look at it over Christmas. I looked at my trades that I took on oil last year, and I looked at what the forecasts were and how the news affected oil last year. So obviously we get oil inventories every Wednesday, and I looked at all the forecasts were, and oil basically just seems to do that between two price points. And I went back historically and looked at it as well. And it does that between two price points until the Saudis and OPEC decide they don't want it to bounce between those two anymore. They want it to bounce somewhere else. Yeah. It's impossible to position trade and predict anything. And it doesn't pay any attention to the fundamentals which should drive it, which is supply and demand. So I've decided I'm not even going to look at it. It does have an impact on the Canadian dollar movement. When oil prices are driving, Canadian dollar will drive. When oil prices are dropping, Canadian dollar will drop. So in that respect, it's worth having a look at. But do I have any control over that? So if the Canadian dollar is coming down, I can go, oh, look, oil's coming down. That's why the CAD's coming down. Does it matter? The CAD's coming down. If I'm in CAD long and the CAD's coming down, the CAD's coming down. I can see oil inventories released each week, and I can see oil news. That's all I need. If the Saudis, if OPEC come out and say we are going to put a restriction on supply in place and we're going to cut production by $10 million barrels a day moving forward for the first quarter, I know oil price is going up. I don't need to look at an oil chart. And it just adds another thing to look at. So that's my New Year's resolution this year. Focus is basically, there is nothing else but FX in this terminal. You will not see anything else. If you ask for anything else, you're not getting it. I haven't got it. It's FX. And the indices, obviously, are the indices. I only trade these US indices, and I'm starting, obviously, the FTSE this year. We'll see how that goes. So I'm just trying to focus and keep everything there. Crypto, not interested. I'm not even going to look at it. Haven't got it. It's not in my market watch. It's not going in my market watch. Clean, concentrated, focus on what works. I looked at what I lost on oil last year, and it's annoying. It's a holiday. Yeah. It's a Nielsen beach holiday. If you know Nielsen, you know how much I lost. So not interested. There you go. That's my New Year's resolution anyway. And I obviously want to spend a lot more time focusing on this new hedging strategy that I've been developing. So I want to not be sidetracked on that by anything else either. So that is FX only, and only limited pairs as well. So, but that's still. Could you show again entering points for each of the positions? Yeah. So Aussie yen. 96,235. So that was the H1 RSI extension from the 28th there. And that was the M5 reversal alert on the 28th. Data issue here as well. Okay. So that was your reversal alert there. That's Aussie yen. What else am I in? Aussie CAD yen. Same thing. It's the H1 RSI extension. Sorry, no, it's not. It's that H1 RSI extension. That was your 5-minute reversal alert there. 106.612. I've got 4 exposures on the yen. Pound Swiss. 107. It's basically 107 round number, basically. That was, again, the H1 RSI extension. 5-minute reversal alert was there. I'm going to stop out on that anyway in a minute. Where are we? Pound yen. 179. So it's basically 178. Big round number, pretty much. That was your reversal alert. H1 RSI extension. That was your RSI extension. That was a 5-minute reversal alert there. Pound US dollar. That was short up there. That was the H1. They're all, I mean, it's all the same thing. This is what this account is H1 RSI extensions. So that was a reversal alert there. And then obviously pushed down, which we're in at the moment. That was 127.910-ish. US dollar Swiss. 84.087. Again, H1 RSI extension. That's when we got the extension. We didn't get a reversal alert there because of the speed of that move. So the reversal alert on the 5-minute chart here, that was your reversal support rectangle. We had a massive drop on the 5-minute chart, and then we sat there for the entire day. So we didn't get a reversal alert that day. And then we did get a reversal alert. We dropped down in the Asian session the next day. We got a little bounce there. So that was the entry there. You'll see on the 5-minute chart. So that was the drop, look. So that was your reversal alert on that candle there, the support rectangle. So we dropped, and then we didn't get, then the reversal moved down to there. We didn't get that entry that day. The entry was on the next day. US dollar Swiss there. That was your first reversal alert, which was off of that candle there. Which then it obviously tanked a bit more. And US dollar yen, and the other one. That was the H1. Again, H1 RSI, M5 reversal alert. And then we had that big wick down and pushed up. So that's 148.40. I'll close some of those out today. I hope you've quit them for good. We've been here before. Yep. How much are you risking per trade on the SIH? Quarter of a... Don't know. Quarter of a percent. So what I'm doing, because I'm running, in effect, I'm running 4 accounts now. Right, so I've split my risk and I've split my money across different accounts. So the position trading account's got 50K. These 2 accounts have both got 20. So I'm running a 0.25% risk across NASDAQ, DOW and S&P. And I'm running a 0.25% risk on the FTSE and the DAX. So I've reduced my risk down slightly from what I was trading last year, because I was trading 0.75% last year, but I've introduced another instrument, FTSE, so I've reduced risk, and I've split it obviously across these 2 accounts because I'm not sure on the I'm still undecided on the FTSE. This morning's been great, but obviously that's one day. But so I've reduced my risk down because what I'm looking obviously to do, I'll be drawing money out of all the accounts based on how they perform. So we're going to get months where the position trading account's going to do 20%. We're going to get months where this is going to make a loss maybe, or this might do 2%, 3%, or we could have a run on the SIH, on the indices where this produces 25% and the position trading account's only done 3%. Yeah, money at the end of the day is money. So this is a higher risk strategy because it's in, out, done in a day, whereas position trading is a long burn. So they're different strategies, so therefore they've got different risk allocations. And the other account I've got is a 30K account, which is for the hedging strategy. And that is basically going to be, and again, I'm not going to go straight into that with live. My plan was to go straight into it with real money in January. I've decided to sideline that capital. It's in the account ready to go, but I've decided not to go live with it yet, and I want to demo trade it. One, because that strategy, I'll explain it more when I actually run it. But what that strategy relies on is picking the right instruments. So it's because it's an always-in strategy, I can allocate a big sum of capital to it, knowing that there's going to be very little risk. Because as you'll see, when it takes a trade. Okay, so that's a long. We've just gone long there. We're hedged. That's it. I cannot lose more than $367. I don't even know what this is, how this risk is set up, but that's it. It's a hedging strategy. So it's a hybrid between position trading and hedging. But with position trading, obviously, the focus of position trading is a portfolio approach. So I'm looking at this, like I said this morning, I was looking at this going, well, should I just shut the whole lot and just take the money? Because I can. So all these trades have been taken. They've all gone into profit. My target is I want to do 1/4 to 0.5% a day. Bang. I did it. I had 0.5%. I've got 0.5% there now. I can close all this out now and walk away. The reason I'm not doing it today is because the first week of the year, there are no RSI extensions. So if I shut all this now, I've got no risk on the table, and it's highly unlikely I'm going to get any risk on the table today, because unless we get some big moves in the US session, we ain't going to get any RSI extensions, which means I'm going to be sitting there going, got no risk on. No risk, no money. Can't make money, can you? So the reason I'm allocating quite a high capital allowance to this strategy is because it is a position trading strategy. So this is hedged in at that on the US dollar CAD. Let's say, for example, today as well, this took a trade on the New Zealand dollar yen. Yeah, the New Zealand dollar yen trade rallies and doesn't get hedged and makes $550. Yeah, I will be myself manually closing out that trade and walking away with that 100 and something percent, which is equivalent to 1/4% on the account. Yeah, again, this strategy I'm going to be running in exactly the same way as position trading, in the fact that I'm going to be looking for somewhere in the region of 1/4 to 0.5% per day. So I'm looking for this 30K to return around about 10 to 15% a month. The difference between this strategy is if it suddenly takes off 3 trades in one direction and you get a big rally start and you get an ADR hit on 3 things which have all gone the same way on the same day for you, because it's trading with high risk, high lot size, unlike position trading, because we are locking in a percentage loss. Yeah, you can make some massive wins. And the testing that I've done on this, I think it's got the potential to drop 10, 15, 20% months very easily when the market moves. It's a momentum strategy. It takes trades based on momentum and it hedges them if the momentum fails. So if we go into an accumulation, we don't want to pick a direction or make a decision until the market makes that decision. So what this will do, and I'll show you what it will do. when it starts to move, there will be a level, which is this line here, where we sit now hedged and we do nothing. I have no idea where this is going. So we will wait for the market to make a direction. It's either going to do that for however long, days, weeks, I have no idea. It's just going to move around, in which case I'm just going to sit here and go, all right, fine, wait. When you're ready, let me know, and then we'll start to trade. Or it's going to fly down there, and as soon as it hits that line, we are going to lock the profit in on that short, and we are going to trail that move until it reverses. That point, we then make a decision to get out of that short. We use a percentage of that to close that position out, and we carry on. Yeah, so it's normal hedging. Normal hedging strategy. You just do drawdown control along the way using percentage of profit. The difference between normal hedging strategies that people trade with EAs and however they're trading manually is they don't take a portfolio approach. So if that trade now suddenly goes down to there, makes a profit and then pulls back, gets me out, and that is less than the profit on another position I have in my portfolio, I will be using the profit on that portfolio trade, whatever it may be, whatever other pair, to 100% close it. And this is why I haven't gone live with the system or the strategy yet, is because I want to see how often we get this. And this isn't something you can do in a back test. You can't simulate this. You can only trade one pair at a time, and you can only see what's going on one pair at a time. So I want to do I'm 100% convinced the strategy is fine. It will work. I know it will work because it's position trading. Yeah. So we've banked profit there. We've closed $102 out, and I'm in $512 of profit. New Zealand dollar yen today has rallied to 550. So what I will do is I will close that 550 out on New Zealand dollar yen, and I'll do more drawdown control on this using the portfolio approach that we do in position trading. Yeah. And that's the bit that I can't simulate. I've got to forward test it. I'm not quite brave enough to forward test it on the capital yet, because what I don't want to do is suddenly get into an immediate hedge and be stuck. Yeah. So basically, it's going to be another position, which is why I've only got 50k in the position trading account. That money is now allocated outside into this. So there you go. So that's just closed that out, basically. So that was $100 profit. So we got out of that hedge, that previous hedge, we're done. Yeah. So that's the way it basically works. It's standard hedging. It's nothing clever. As I say, nothing I do is clever. Nothing I do is complicated. It's just maths and making ways to extract money out of the market. Market moves up and down. I ain't got a clue which way it's going. Neither of you. What we can do is mathematically formulate a plan to extract money when the market moves. We don't know when it's going to move. We do with news, but we don't know which way it's going to move and how far it's going to move. Yeah. What we do know is that when we've got a P&L that's green, we can put that into our bank and spend it. That's my job. My job is literally, as I keep saying, to come in here every day, look at this and go, that's green, put it down there. That's green, put it down there. That's red, wait. Holy crap, that's really red. Better do something about it using the green. Very simple. It's a traffic light system. Red and green, isn't it? But that's basically it. Now, it will experience fairly high drawdown as well, which is the other downside to the strategy, which is why I've got to limit pairs. So it will be traded. Probably I'm going to trade it across 8 instruments, which are as uncorrelated as you can get. So pound US dollar will not be traded with the euro US dollar. When they move pretty much the same. So I'll pick something. I want 2 pairs that move in Asia. I want 2 pairs that move in London. I want 2 pairs that move in the US. And then I'll pick a couple of extras because I want diversification. When the pound is dropping like a rock, I want the New Zealand or the Aussie to be doing something different because I want the chance, and it's only 50-50 on everything, for when something is going mentally in one direction, I want something else to be able to have the ability to go the other way because I want to use the profits from that trade to pay that trade and basically reduce these hedges down as fast as possible. But again, it's something I've been playing with over a while, as you know, if you've been in here. But I was hoping it was going to be ready for January, but it's not. The EA is ready. This is absolutely, this does everything I want it to do. It works perfect. for what I want it to do. It's not a fully automated system, though. It is a mechanism to reduce hedge risk. You see the hedge now on this one is $144. The last hedge was $350. The mechanism for hedging in here will automatically reduce your hedge risk down. So on days where we get this, and then we get a clean break on another instrument, you'll be banking 0.5%, 1% across two instruments, close them both out, done for the day. Yeah. So it's a nice strategy, but it's not. I've tried really, really hard to fully automate it. I can't fully automate it. It's too complicated. And this is what I've always said. If you've been in here for any period of time, you'll have heard me say it all the time. Hedging is just a nightmare. It is. Because of things like this. Look. Right? I've now got a long position here. ADR is 71. I am 250% away from my entry as ADR. I'm 2.5 ADR in drawdown on that. How do you deal with it? Yeah, it creates problems. When you hedge, you are always leaving something to go hideously into drawdown against you. Yeah. And this is why on an individual instrument with an EA, you cannot work out a way to make this. I have made it, it is profitable on its own. But look at that drawdown. If I've got two other positions which are way above that, I'm closing that because I've just made a fortune on that drop. Yeah, but the EA can't take all of this other open profit and everything into account very easily. And when you're back testing, you can't do it. So that's the reason. What was the question anyway? I've gone off onto this because somebody asked about risk. Yeah, percentage risk. That's the reason I'm risking 1% on those, because I've got this other strategy which I've allocated 30k capital to. So I've had to reduce risk because when I introduce that risk onto this, yeah, because I'm going to get into the same trades, aren't I, on a lot of stuff. It's doing similar sorts of things. This is a really simple. This uses basically market reversal alerts to get in. It doesn't. It uses a very similar mechanism to get in when the market starts to move. It's a momentum strategy, yeah? So we sit there and we do nothing and we wait for the market to move. When the market moves, we go long. And it's either going to work or it's not. If it doesn't, we hedge. Simple. If it works for a bit and then it doesn't, the hedge gets smaller. And we lock in a tiny little amount of money and we go, oh, well, have I got anything today that will pay for that I've closed out in profit? Yeah? Okay, we'll shut it then. Let's try again tomorrow. Simple. All good strategies are super, 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 super simple. One moving part, buy, sell. I've got literally an MA trigger in it. That's it. The rest of it is maths. Because maths always works. We just don't know which way the market's going, do we? That's why the maths doesn't work, because we can't predict which way the thing's going to pop. Happy New Year, Tom. Gold, LOLAZ. Yeah, not trading that thing. Which way is gold going? Opposite way to the US dollar. Deal with it. I'm hoping that removing it from the market watch, people just won't ask. But anyway, we'll see. It's an experiment. Science. I know the pound squeeze caused one of the losing months last year. Yeah. One of them was caused by oil. Yes. If you remember at the beginning of when I started trading oil, beginning of last year, I can't look at the oil chart because I haven't got it. It was really easy to trade. Then it became horrible because it did the opposite to what the fundamentals said it should do. And that is where oil differs from FX. When FX does the opposite to what fundamentals say it should do, it bounces because it's a liquid market with multiple reasons to move. Commodities have one reason to move, supply and demand. When they do the opposite or the fundamentals for supply and demand shift, you will get a monster move against you and you can't position trade out of it because now it's doing that. Yeah, remember we were stuck in that little range and we were forecasting 95 a barrel and then it dropped. We were like, no one said it was going to do that. The banks didn't even know that was going to happen. Everybody got hurt. commodities are just not suited for position trading. Any other strategy, I think you'd probably be all right. I was considering using it for the hedging strategy. I was going to chuck a commodity in there to diversify, but then I thought, well, that's just going to do the opposite to the CAD. Just pick a CAD pair. Same thing, innit? Aussies are going to move the same as well, aren't they? They get their commodity pairs. For the latest H1M5 set file, any reason you switched RSI from 14 to 21? No. It never was 14. It's always been 21 on the 1 hour chart. 4 hour has always been 14, and it still is. Can you go over US dollar CAD? I'm still an 8% drawdown. Average at 133.575. Two ADR away. Yeah, I mean, it's bottomed out nicely. So target is the FOMC move. So the problem you had on this, obviously, is it moved against you on FOMC, and we didn't get the support. So it just dropped for a couple of days, and then we were basically into Christmas volatility, which was unfortunately, you had news going against you again. So it's just moved a lot further than expected. Anybody short from that FOMC is going to want to pull back on it. So I would say at the moment where your average is obviously that's the accumulation. There's two there. There's that, and there's that, which makes that. You're bang in the middle of that accumulation. So if we are going to continue south, somewhere in there is where I would expect it to pull back into before it drops. At the moment, it's looking good, but you can't, I mean, none of this price action is readable at all. It's just all Christmas light liquidity and crap. So, you know, that reverse alert retest looks like a lovely W. It's just market going sideways, really. We had a nice big sell-off last day of the year, V-shaped recovery. It's just banks balancing books. It's not a move. So that's what I said today. We will find out if those US indices start to unravel. And don't forget, the US indices have got a big correction to come. Look at all the US indices. Yeah, we got a hell of a correction on that rally, accumulation rally, at least down into here. I suspect. I don't know, but I would say it's likely that we'll get a correction on the indices this month. I don't know. They might rally like crazy, but if we do get that correction, the US dollar is going to rally, which means US dollar CAD is going to come up and correct. So if you look at this in a similar way, that accumulation, remember that accumulation I just drew on the US dollar CAD, where we'd done that? Yeah, look, it's the inverse. So if the indices get down to there, I would dump that US CAD position in case they do that. We don't know. I mean, this is the thing. This is trading. We don't know. There is no way of knowing where anything is going to go. So all you can do is get in and get out. But right now, if we break that high, we're going bullish in January. That's all the signal we have. So somewhere in there, you are going to find sellers. We know that because they sold into it, broke it, retested, continued to sell. So the sellers there, the sellers here. Yeah. So these are the sellers. So you're going to hit the sellers, and they're either going to win or they're not. So those are your targets to the upside. That one is your average. Don't know. 8% is a lot, though. It's only moved 200 pips. That's what? I suppose it's 3.5 ADR, 4 ADR in it, I suppose. So seems quite a lot of drawdown though. But yeah. We've got FOMC on Wednesday. So FOMC this week is not a rate decision. It is just meeting minutes. Bear in mind the last FOMC we had on the 14th, or whenever it was an interest rate decision. They released the meeting minutes. They said they were going to bring forward the interest rate drop. We've had no real data since there. Yeah, we've had no data since that FOMC here on the 13th that would say that statement will be any different to the statement we got back there. Yeah, and which means that it could go absolutely anywhere it wants to. Then it's highly unlikely this week the FOMC statement is going to come out and say, oh, actually, no, we're going to go the other way and increase interest rates or anything stupid. Or we're going to go, we said that we're going to bring the interest rate forward to March or April or May. Actually, we're going to go November again. It's just not going to happen because there's nothing changed. So that doesn't mean bullish. That doesn't mean bearish. It means how are you positioned, market, at the moment? Well, we'd rather go long on it because we'll make more money. Then that's what will happen. So there's nothing. You could easily find yourself back here. Not on FOMC, but I suppose, that's 200 ADR in it. So that would be a hell of a move. But yeah, it could be up there, couldn't it? But equally, we could just flip flop. It's not. It's a very. You have this period of time at Christmas, don't you? You have Christmas, and then you have this limbo bit in the middle before New Year, where no one's really sure whether they're in Christmas mode, getting ready for New Year. Are we back at work or not? It's just like it's this bit. This is where we are now. January for us is we've had all this time where nothing's really happened. So what happens next? Don't know. Flip a coin. I have no idea. Neither does anybody else. The banks and institutions will have sitting on their desk orders to execute. That's what's going to determine where this goes. If Microsoft has said, liquidate all our Canadian dollars and put it into the US, we're opening a new plant in Silicon Valley, US dollar CAD's going up. Why? Because they're going to liquidate all their CAD and buy US dollar with it. Up it goes. If Microsoft have got the opposite order in because they're moving Silicon Valley to Canada, yeah, that's what's going to move the market. What commercial orders are here today that are going to drive this up or down, or this week rather, because there's nothing fundamental that's going to shift it, is there? So we're in limbo. Have to wait. Looking forward to the new strategy. Sounds good. Yep, sounds good. Sound is always good. Practice. It's something I still haven't worked out how I'm going to execute it either. There's multiple ways to execute it. Basically, with a strategy that is to do with hedging, or any strategy really, there's a billion ways you can get into the market, isn't there? And all strategies should focus on what you do after the entry. Yeah, this is where all strategies, all training, all systems go wrong. They focus on how to get in. It's got bugger all to do with what happens to your P&L. I can hit the button long or short now, and I've got as much chance of your strategy working as my random strategy of hitting the button long or short. What happens after I've hit the long and short button will determine whether or not that is a profitable position or a losing position. So with the hedging strategy, I'm focusing on support and resistance, but I'm also focusing on momentum. I've tested a support resistance bounce variation, and I've tested an EMA cross variation. They both produce the same results, pretty much. They both get into the same problems, pretty much, because they're both working on the same thing, random. So I haven't quite worked out how I'm going to execute it. One of my theories, or one of my ideas, is I'm going to be running multiple pairs, and I'm going to analyze the market every 4 hours. When we get down to an area of support, I am going to place the EA on the chart and wait for an EMA cross to get in if it breaks long. If it doesn't break long and it breaks short, I'll take it off. So it's got to have a manual intervention. The other way is I go full auto and I just use an EMA cross entry system, which is equivalent to a 5-minute reversal alert. If you use something like a 20 MA, what's this using? This is using a 9. So if you look at a moving average crossover, not 2 moving averages, a price crossing over moving averages. Is this a 9? Yeah, 9. So if you look at this, for example, so where you got that cross above there, where that candle closed above that moving average, what is that? A reversal alert. Yeah. That one there. That would have had a support rectangle. That's a reversal alert. The logic in the reversal alert indicator is way more advanced because it doesn't give you a support rectangle on every single move. It waits. It uses momentum. It uses distance. It uses other calculations in the market reversal alert. So yeah, this is a simple moving average cross. So basically, if it crosses above that line, we go long. Because why? Momentum's long. They're buying it. All right, well, let's buy it then. Are the buyers winning? Yes, brilliant. We make money. Are the buyers losing? No. All right, we'll wait. That's the logic. It's that simple. It really is. It's momentum. Why was I saying that? Oh yeah. So that's the fully automated way of getting in. So at the moment, this will literally just take trades when you get a moving average. Yeah, we crossed above, go long. Did it work? No, we'll go short. What distance? Don't know. Half an ADR, something like that. I have no idea. Half an ADR, 3/4 of an ADR, 1 ADR, 10% of an ADR. It doesn't matter. It's just a different distance, isn't it? We don't know what distance is going to be. So that's the fully automated way. The manual way is I watch this and I look at the charts every 4 hours or so and I go, oh, look, price is down at this support area. Okay, so what I'm going to do is I'm going to stick the EA on the chart. And when we get a break above the 9, I'm going to assume that the buyers are buying again and hope that plays out. That's the manual way of using the strategy. And then I will set the hedge to be whatever that distance is, roughly half an ADR, something like that. If it was 3/4 of an ADR, I set it to be 3/4 of an ADR hedge. So this is why I'm a bit unsure. All variations work. It's very much like the stock index hedge. All variations kind of work, but you need to be involved in it. Yeah, it's not a set and forget type thing. It's just another way of extracting money. It will be good. It's just I haven't quite worked out the logistics of it. So that's why I want to demo it. Because I don't know. I don't want it to take over my life. This is the thing. And this is why I'm useless at letting things go. So I'm only going to trade it on the hourly charts. So it's an hourly strategy like position trading. So it's going to be longer term. But I haven't figured out how to do it yet. Well, I could just flip a coin. You know, works the same way, doesn't it? How do you read the directional buyer scorecard? When it says change, does that change happen daily or does it only change on the scheduled news events? So that's on news. So the changes, that's the interest rate change, inflation change. So it gives it it does actually say on here. Up there and down here, it tells you what they all are. So basically, it's like it says, it's a scorecard. It adds them up. Yeah. So if the interest rate of the Swiss is higher than the yen, we get a 1. If the interest rate went up last time and the yen didn't, it gets a 1. If inflation is higher for Swiss than it is for the yen, it gets a 1. If the change in inflation last time on news event change, because obviously this doesn't change daily, it changes monthly, it gets a 1. So that's now a 4, which is a buy. And then we look at all the other elements. So it's literally just a scorecard. But yeah, it changes when the news changes. It's within half an hour. It's live pretty much, basically. I was already in it when the FOMC move happened against me. Yeah, that would make sense. A bit more aggressive positions than you needed to and didn't close them when I should have. Kind of like the pound situation, yeah. Yeah. If you don't close aggressive drawdown control positions, obviously you will go into more drawdown. It's not right or wrong. It's not advised, but it's not what I would do. I have done it, and it has worked brilliantly. Yeah, if you went in with an aggressive drawdown control position there, and you had a stop loss there, you would have been stopped out on that aggressive drawdown control position. If you had forgotten to put a stop loss in, and it pushed down and then flew up like that, that's a happy mistake. Half of position trading, half of trading is luck. Yeah, 50-50 shot net. If you use a stop loss, you'll get stopped out. If you don't use a stop loss, there's a chance it will go your way. Yeah, there's also a chance it will do that. If it does that, I mean, I've done it. I've done aggressive drawdown control positions where I haven't put the stop on, and I think I've done it in here. It happens. Sometimes I open up my thing and go, "Why is that in so much drawdown?" Oh no! And then it's like, shut it. You take twice as much loss. I'll take a 2% loss instead of a 1% loss. I've had happy instances where it's done the opposite. So, all knows. But hopefully it's rallying at the moment, so hopefully that's going up. What's your take on lot size when you're looking to do drawdown control? How do I decide? It's based on how good the entry is. So, this is a good example. So, let's say I was in it with, I don't know, let's say I'm long 2.5 lots. Yeah. And I see it bounce, and I see it come down, and I see it bounce, and I see it come down, and I see it bounce, and then I see it push up hard, and I see it bounce, and I go, right, I'm getting aggressive here. This is the 1, 2, 3, 4, 5th bounce at that level. They're not letting it through. The buyers are buying that area. Yeah. That is a really, really strong aggressive drawdown control entry. So I would get in there with 2.5 lots, 100% of the size I've got on, double it, and stop out there. If that stop loss is no more than 1 to 1.5%, if I have to get in there with 2.5 lots, and when I drag that stop loss down to there, it goes 3.4% or something, it's like, no, can't do that. I'm on an aggressive entry. I'm only ever wanting to risk 1%, less if I can, but 1%, 1.5% is really the max. Which is basically all you're doing is you're converting this position trade into a normal stop loss trade. So you're going, that's a great support bounce. I'm going to enter along with a stop loss, and I'm going to risk 1% of my account on it. Yeah. If instead of it being that situation there, yeah, we were here and I saw this bullish engulfing. Yeah. So let's say, for example, I'm in 2.5 lots long and I see this move coming down and I see a whacking great bullish engulfing going there, i.e. on the 15-minute chart, we've had a reversal alert in there. Yeah, on the 15-minute. So I feel it's in a 15-minute reversal alert, basically. I would go, that looks like a lovely bull move. And if they now continue that bull move, we're going to win. If they don't, it's just a pullback on a continuation drop. I would probably only risk maybe 1.25%, half of my lot size, because I'd want to give it a little bit more of a wide berth. I'd like a larger stop loss on it to give it room to wiggle, because when you basically get the bulls taking control, what you tend to get is a W pattern. Now, if that's the bull move and it's going to be a W, it might be a W which is higher than the previous low or lower than the previous low. I don't know which. So the more room you give, the more chance you've got of staying in that trade while the bulls and the bears fight it out at that level, waiting to go long. because we don't know what it's going to be. Yeah. So, and because there's no support here, there's no reason for that. We haven't bought from this level before. If the buyers are coming in now, is that a profit take on that drop, or is it buyers entering the market? If there was a couple of support bounces at previous levels I could see, I'd have more faith in that. Because I've got no faith in it, I'm not going to risk as much. So I will basically put my aggressive positions on based on, does it look good? You could have a ranking system if you like. You could have an A, B, and a C trade. If I've got a bullish engulfing and there's no support and resistance, it's a C. So I'll risk half of whatever lot I've got on. If that is a bounce and I've seen a double bottom, i.e. we've had one support bounce and I've made a W pattern, I'll risk 3/4 of whatever lot size I've got on. If it's a triple bottom bounce at a monthly support with a reversal alert and we've just broken a high, chuck it on. Chuck it all on. As long as whenever you get in and wherever you are going to get out, that is not more than 1 to 1.5% of your account. It's a stop loss trade, a normal trade. We are reverting from position trading strategy to stop loss strategy because position trading strategy has failed. Fundamentals have shifted. Something's happened. Something's changed the fact that they're not profit taking this move. So what we need to do is we need to bring our average down to get ourselves out of it. The only way we can do that is by getting in with more size. And if that's wrong, we get out and we go, that we took a loss. Right, wait. Let the market now decide what we're doing. Are we going down further? Okay, well, we're going to have to go into more drawdown on that position. Or you shut some of it. Yeah. Or, you know, there's a million ways to do it. I've got loads of videos about drawdown control on here. These ones. Go and watch these. These cover pretty much all of it. So aggressive drawdown control, turn any losing trade into profitable, and how to survive a squeeze. These three all cover drawdown control in shapes and forms. In some shape or form. That's the main one, aggressive drawdown control. But there's no right or wrong. There is different. That is all there is in trading. There isn't a right and a wrong. There is different. How you do it is up to you. What you risk is up to you. Whether you're right or wrong is up to you. If you do an aggressive drawdown control position and go and walk the dog and forget there's a news event on and you come back and it's moved 400 ADR in your direction, happy days. Well done. Have you made a good trading decision? Is it skill? No, it's luck. If you just made 7% on that when you were in 6% of drawdown and you close the whole lot out with 1% in an hour, you go, that was easy. I was lucky. Anything wrong with luck? Going to a casino and you put a roulette chip on one of those numbers, luck. You can have a lucky streak, you can have a losing streak, but you are in control of your risk. How you risk is up to you, and you have to have a limit on your risk. Which is exactly the same as with position trading, which is why everybody goes, oh, it doesn't use a stop loss. I'm not using a stop loss. I have in my head a level where I don't want to be in it anymore. Yeah. It's risk. I am getting into like AZs in 8% risk, looking to do aggressive drawdown control. Good. 8% risk is too much for one position. However, it's not too much for one position. If you've only got 2 positions on, one of them is doing virtually nothing, and you banked 25% last month. 8% drawdown, if you banked 25% last month and you've only got 2 positions on, it's not a problem because you can shut that and walk away with 18%. Every situation is different, which is why I can't say this is how you do it, because how you do it is based on you, your position, your portfolio. I'm sitting here looking at having banked 0.34% today with 3.8 there. I can shut this now, put that down there, walk away, and I've done 2 days' work. I can leave that and hope that turns into 2% and bank that and go, I've done a week's work. Yeah. If this suddenly pops today, all of these pops, if all these yens, suddenly the yen collapses today and everything moves 200 ADR against the yen, I'm out walking the dog. I come back in front of just before the live session this afternoon and I go, oof, excellent. Close, close, close. Was that skill? No, I was walking the dog. I came back and I saw that and I put it down there. There's no rule for it. You need to bank money when you need to bank money. You need to bank an amount of money to pay the bills. And again, if I've paid the bills, yeah, if you've paid all your bills this month and you've got 2 weeks left, take it off if you want. Not right or wrong. It's your portfolio. It's your amount of money. There is no one that can tell you what to do with it. Do what you want to do with it. That's all there is. Happy New Year, Astro. Welcome back. Why don't you put stop loss when you enter a position at the point where you think your idea is invalidated? It's all covered in the bootcamp. Seems safer to me than waiting for a manual exit on the losing position. Don't know what you mean there. Go and watch the bootcamp if you haven't already, Razvan. I don't recognise your name, so you're probably new in here. That will explain why, if you're using a stop loss, you are just giving money to your broker. Yeah. Any of those ring a bell with you? If so, they're all caused by using a stop loss. Right. There's nothing wrong with using stop losses. If you want to use a stop loss, use a stop loss. Just bear in mind you're placing an order into the market to tell your broker to take money out of your account. That is literally it. Prove me wrong. If I go on to Aussie dollar yen now, which I'm long on, and I go like that, yeah, I am telling my broker, if price moves up and down this week, yeah, and it moves down by 30 pips, take $36 out of my account. All right. Do you think that's a good idea or a bad idea? Or do you think it would be a better idea to let the market move up and down this week? Yeah. And wait until that's green and I can put it down there. Is it better to just guarantee a loss and give it to your broker, or wait for the market to give you a profit? I'm happy if you have the opinion of it's better just to give the money to your broker. That's no problem. But this is probably not the job for you. And if this is your first time in here, you will get used to my sarcasm. If you're not from the UK, I will probably make no sense. Anyway, morning day trader FX. Happy New Year. I'm caught up on the chat, look. All done. Right. So that's me done for this morning. Lovely moves this morning on the FTSE and the DAX, all done. So that was a nice, easy, profitable morning. Good morning so far here as well, which is all good. So I'm going to work on my other EA and get the account set up, get the demo set up for, I'll just find a demo basically, for the other strategy. And I need to do some more testing on that. So I'm going to hopefully have that all sorted this week. Just depends how much time I get for the hedging strategy. But this today is basically, as I said, wait and see day. So there is no news today. We've got bank holidays on. It's still kind of Christmas aftermath. So I don't necessarily think we're going to get massive moves this afternoon. We might do, but tomorrow it all kicks off in the New York session. So I think we need to just wait and see. There's no opportunities to trade new entries anyway. There's no RSIs. There's no ADRs. There's just nothing basically. So it's a wait and see what happens week basically. And if I can extract a couple of % out of this week, I'll be happy. But yeah, that's all there is this week. So, all right. So I'll be back this afternoon at 2:20 for the New York session. Back tomorrow morning, 7:50, same time for the DAX and everything. If you need anything, I'll be in Telegram. Otherwise, I'll be back this afternoon if you can join me. If not, I will be back tomorrow morning. So have a good day, and I will see you guys next session. Have a good one.